There's no doubt in my mind that we're going to have quantitative easing probably at the latest by the first quarter of 2025, right? The Fed may even start after the election, right? Depending on how bad things are. But the rate cuts were just the beginning. Powell and the guys at the Fed are saying, well, the economy is great, everything is awesome, but we're cutting rates by 50 basis points anyway, something that they rarely do. I mean, it's very rare for the Fed to move more than a quarter point. Normally, when they're doing that, it's like, COVID or some big crisis. But here the Fed is saying, hey, everything is really great, but we just want to cut rates by 50 basis points to make sure they stay great. Well, if things were really great, we wouldn't need a 50 basis point rate cut to make sure they stay great. They could stay great with rates where they are. In fact, rates should be higher. Rates are still low. That's the other thing that the financial media has got wrong. They keep talking about how we've had high interest rates. They're not high. Rates were at 5.25. That's low. I mean, maybe these guys have no recollection of the world before the 2008 financial crisis. But before then, when gold was under $400 an ounce, interest rates were much higher than 5.25. In fact, the average since we went off the gold standard in 1971 up until 2001, those 30 years, the average Fed funds rate was about 6.5. So at 5.25, we're below average. And if you think about our fiscal position that we're in, we have a lot more debt now than we had in the 70s, the 80s, the 90s. So we're a much worse credit risk. We've borrowed a lot of money that we can't repay. And so the odds of us creating inflation to get out of legitimate repayment are much higher now than they were back then. So we should be paying higher interest rates now than we did in the 70s, 80s, 90s. Now, some people will say, well, we have lower inflation now than we did then. And so that's why rates can be lower. We don't have lower inflation. We just measure it differently. We don't have the same CPI that we had in the 70s or the 80s or the 90s. If we had that CPI, inflation would be a lot higher. I mean, it is a lot higher. We're just not acknowledging it. So you can't say, oh, we have high interest rates because the CPI is only up 2.5% year over year and interest rates are 5%. The CPI is meaningless. You got to at least double it to get the real rate. So rates are very low at a time where they need to be high. A lot of people want to criticize, including myself, Kamala Harris, because she wants to put price controls on groceries. And, I'll criticize Donald Trump for wanting to put price controls on credit card interest, right? It's all wrong. The market needs to set prices. But nobody wants to criticize the Fed for price controls on interest rates. We don't have interest rates. We don't discover interest rates in a free market the way we get the price of everything else. The government fixes the price. You have a small group of bureaucrats who decide what the interest rate is going to be. That's just like the Politburo meeting to decide what the price of bread should be, right? They're both wrong, and they both lead to mistakes. When you set interest rates too low, what happens? Well, you have too much debt because people want to borrow money when interest rates are really low, especially if they're negative, which they are, because inflation is higher than the interest rates, the real inflation rate, not the phony one that the government reports. So everybody wants to borrow. What do people not want to do when interest rates are really low? They don't want to save. What's the point of saving? You're not getting paid enough to save. The interest on your deposits are too low. So if you look around the U.S. economy, what do you see? You see record amounts of debt, record high household debt, record high credit card debt, record high government debt. What does that tell you about interest rates? They're too low. Also, you have record low savings. That confirms that interest rates are too low. In a free market, interest rates would rise in order to attract more savings and discourage borrowing. But that's not happening because the Fed won't let it, because it's got its finger on the scale. And so we're not getting and accurate reading. So the Fed is cutting rates, claiming a victory over inflation, when it should be obvious to anybody who understands inflation that it's about to go through the roof. That we saw a big breakout in inflation up to 9%. We've now seen a pullback to around 3%, right? And we're now finding support above what used to be the resistance. Like for years and years, the Fed had inflation of just below 2%. And their goal, their BS goal, was let's get inflation up to 2% because it's not high enough. 1.7 isn't good. You need 2, right? Which was all BS. They just wanted to create inflation and they used that as the excuse to do it. But now we're building a base of inflation around 3%. We've been building it for over a year. Now that the Fed is cutting rates, we're about to launch from that base up through 9% to new highs. And you're going to start to see the big acceleration of inflation in 2025. Regardless of the outcome of this election, I think it'll be even worse under Harris, but it's going to be worse under Trump too. It'll just be worse, even more so under Harris. But Harris is promising $50,000 to start a small business, $25,000 to buy a home, $6,000 to have a kid, right? Where's the government going to get all this money? The government doesn't have the money, right? They just got to get it from the Fed. They got to borrow it, and the Fed's going to have to print it. What's Donald Trump promising? Donald Trump is promising to renew his. He's going to put that deduction back. So he wants to make the tax cuts that he passed before even bigger, right? By allowing the full SALT deduction that they took away. He's promising no tax on tips, no tax on overtime, no tax on Social Security benefits. Right? Again, this is going to cost the government a fortune. Right? Where are they going to get the money that they're losing? Because nobody is saying what they're going to cut. Right? At least Donald Trump at least talks about having Elon Musk in charge of the Commission on Waste, Fraud, and Abuse. Right? And there's a lot of that. But even if they cut hundreds of billions of dollars in waste, fraud, abuse, it is a spit in the bucket compared to what's off the table, which is national defense, interest on the debt, Social Security, Medicare, and Obamacare, and government pensions. Right? That's all the money. The rest of it is nothing. You can get rid of all of it, and it's not going to matter. But of course, they're not going to get rid of all of it. I mean, they're going to get rid of a small portion of it, and it's going to be dwarfed by the spending increases that are on autopilot that nobody wants to talk about. So we're facing this massive economic crisis, and all the candidates are acting like, well, everybody can get goodies, from Santa Claus. And the Fed has basically got the same mentality. Everything is great. There's nothing to worry about, right? This massive national debt means nothing, right? And the fact that the price of gold goes up almost every day, I don't even know that we've had $100 decline in the last few months. But every time the price of gold ticks down, gold stocks get killed because the investors still don't get it. Gold stocks are only up 32% this year. Yeah, that's more than the 27% rise in the price of gold, but gold stocks should be up way more. Look at Newmont Mining and Barrick Gold, the two biggest gold stocks. They're trading at significant discounts to the S&P. Historically, they've traded at premiums. They're trading at discounts. Meanwhile, their earnings are about to explode. I pointed out on my podcast that if throwing away a month or two during COVID, oil is the cheapest it's ever been in terms of gold. They're giving oil away in terms of gold. I mean, that's why oil is not the problem right now. When Trump wants to say we're going to solve the inflation problem by drilling more oil. Oil's not even part of the problem. Now, oil prices are going a lot higher from here, but right now they're dirt cheap. And why that's significant for gold mining companies is because energy is the biggest component that they have, other than the miners, the labor. So energy is down. The energy costs to get the gold out of the ground, and because the dollar is still relatively strong, it's about to get very weak. But with the dollar index still north of 100, 101, the foreign currencies are not really rising. See, normally when you get a really strong gold price, you have a weak dollar against other currencies. And so even though gold is going up in dollars, it's not going up as much in these other currencies. And those are the currencies that the mines have to pay their workers in. But now you have a situation where gold is soaring and the dollar is kind of flat against a lot of these currencies, or maybe slightly lower. So the gold mining companies are not seeing the increase in their local wages relative to the price of gold. So these companies, after having a lot of disappointing earnings over the years, I think are on the cusp of blowing their earnings estimates out of the water. Yet despite this, they're still trading at these ridiculous discounts because the mainstream media and the mainstream financial sector is still as clueless now to what's about to happen as they were in 2007, first half of 2008, to the financial crisis. Remember, all of these big brokerage firms, these big investment banks that are still around today, giving out bad information, they all would have gone bankrupt in 2008 if the government didn't bail them out. All of them, all these big banks would have failed because they had no idea what was about to happen. And then they got bailed out by their friends in the government. And so the same clowns are still in power today, just as clueless as they were back then, and just as oblivious to what's going to happen. And just one final comment before I open up to questions is the other ultimate irony is that while they're missing the gigantic golden elephant in the room to know that the Fed's making a massive mistake and inflation is about to accelerate, right, not go down. And again, that's going to really create a problem next year because we're going to be in an official recession. So that's going to mean the Fed is supposed to lower rates, but inflation is going to be going up, which means the Fed is supposed to hike rates. Well, catch 22. What do? They're damned if they do and they're damned if they don't, right? What they're going to do is obvious. They're going to just let inflation run. And that's it. That's the end, right? But the irony is, while they're missing gold, the media has devoted almost nonstop coverage to Bitcoin. Fool's gold, right? There, oh, yes, let's talk about what's going on in Bitcoin as if it's even significant. It's meaningless what's happening in Bitcoin. But that's what they're covering. And in fact, yeah, I know Bitcoin is up 50% this year. And that's more than gold. So it's like, hey, who cares about gold? Because Bitcoin is up more. But Bitcoin's gain is irrelevant. And of course, it all happened in the first couple of months of the year. Bitcoin hasn't been going up since early March. It's been going down. Right? And against gold, it peaked out almost 3 years ago. Bitcoin is 30% below where it was against gold in 2021, in like November 2021. But what happens in that tiny market of 1 trillion, gold is 17 trillion, but gold is a monetary asset. Bitcoin is a speculative token, right? So who cares what happens in a speculative token, right? What matters is what's happening with this special monetary metal that has historically been the canary in the coal mine for monetary problems, for inflation, for debt, right? So there's this loud bell that's being rung by gold, and nobody can hear it because they're too busy, sidetracked by what's going on with Bitcoin. But anyway, let me let Paul start calling on some people so I can take your comments or your questions about what's going on this week and what the mainstream media covered or didn't cover.
All right. Hey, everybody. First up, we've got Holden Mitrione. You there?
Yeah, thank you for letting me on, Peter.
Who am I talking to?
It's me, Holden.
Oh, okay.
Yeah, so, I mean, given the fiscal position of the United States right now and all the problems that you just talked about, how how is the rest of the world going to respond, do you think, to a sovereign debt crisis in the United States?
Well, I think that they're already preparing for it now. That's why they are buying more gold. And I think they're going to accelerate the pace of their gold accumulation as we get closer and closer to the tipping point. But I think that tipping point is likely to happen next year. I would prefer that it happened before the election, but it's most likely not. But I think once it's clear that the Fed is in this box from which there is no escape, right? Because inflation is moving up, but the economy is weakening, in recession, unemployment is rising, and now the Fed has to make this decision. And I just don't see them doing the right thing, which would be raising rates during a recession and not only making the recession worse, but causing a financial crisis from which there can be no bailouts. Because the way the Fed was able to bail everybody out in the '08 crisis was by creating inflation. They eased policy. Well, if they make the decision to fight inflation and tighten policy, then everybody's on their own. Nobody gets a bailout from anything. And so that is, economic Armageddon. And, it's catastrophic for the politicians because they have no place to hide, right? It's like, okay, you did this to us. And so I just don't see any precedent for that. I see a lot of precedent for massive inflation. And that's where we're going. And then, the blame capitalism rhetoric is going to be ratcheted up. And, more and more people are going to be demanding price controls to get those greedy corporations and speculators or whoever they want to vilify as being the cause of the inflation. But that's where we're headed. But foreigners will be watching this from their vantage point and just look. We're just getting out of dollars, right? We're done with this, right? And they're just going to sell their dollars. And what are they going to buy with
You
those
think
dollars?
so?
They're going to
like, remember back in '08, they bought dollars. You think this time they won't?
Yeah, well, in 2008, the reason they bought dollars was because the dollar was at an all-time record low when the financial crisis hit. The dollar index was at 71. Now it's at 101. And gold, had just gone from 300 to 1,000. So gold had tripled and the dollar was at a record low. And then this happened. And it affected the whole world because the whole world was holding on to our mortgage paper. And people at the time sought out refuge in what looked to be an undervalued US dollar, based on the fact that it was at all-time record lows. The euro was up at like 160. Where's it now? 112, 111. Right. So the dollar looked cheap to people back in 2008. And so people still had credibility. The Fed still had credibility. People had confidence in it. But this time, I think all the confidence is going to be lost, especially when you have the Fed saying, oh, we're cutting rates because we know inflation is going back down to 2%. And next thing you know, it's at 5%, 6%, 7%, wherever, on its way, much higher. So I think they're going to dump treasuries. They're going to dump dollars. They're going to buy gold with, they're going to buy things, right? Some dollars will end up being spent to buy U.S. companies, right? Because people aren't going to want to hold U.S. dollar debt, but they might not mind buying, Campbell Soup or Colgate or companies, marquee brand names, they may buy those stocks up just to own them, especially if they have a global name and they're selling all around the world. They also may buy up some of our property, some key marquee trophy properties. Foreigners might say, "Oh, let me buy that. Let me buy that." Right. Another thing I think that they're going to buy a lot of is our used cars. We got a lot of cars in America that people are going to be too broke to drive because gas is going to be really expensive. So they're going to buy a lot of our used cars. But all that money is going to come back to the U.S. because no one's going to want to hold it anymore. The world is just going to move away from the dollar. They're going to transact in other currencies. And what does that mean about our trade deficits? Well, we can't run $1 trillion a year trade deficits anymore. Well, that means that $1 trillion a year worth of goods that were coming into our markets, they're not coming in anymore. So they're not going to be here. So you're going to have a lot of empty shelves. Americans are going to have lots of money, right? Everybody's going to have lots of money to buy stuff. There's just not going to be anything to buy because the money's not going to have much value. That's where we're headed.
All that money that we've been exporting is going to come back to the United States.
Right, because
that's just going to,
Right, because they're not going to want to hold it anymore because the dollar is going to be a one-way ticket down. So they're going to sell and they're going to buy things. They're going to buy assets. They're going to buy goods. That's it. And then the dollar, we're going to have a real economic crisis in the United States that we should have had 10 years ago, 20 years ago. But we were able to succeed in kicking the can down the road. And that's going to come back to bite us because the collapse is going to be much worse. Because our economy is so much more screwed up now. The deficits are much bigger than they were back then. So it was an easier problem to solve 20 years ago. Not that it was easy, it was difficult. That's why we didn't solve it. That's why the Fed refused to allow market forces to operate, because it would have been painful to do the right thing in 2001. It would have been even more painful to do the right thing in 2008. It would have been more painful still to do the right thing in 2020. So they kept doing the wrong thing. And now they're doing the wrong thing again. And we haven't even really started officially the recession yet. Next up.
All right, thanks, Holden. Next up will be Brianna.
Hello, thank you so much for having me on your space. Can you hear me?
Anybody? Hello?
Oh, can you not hear me, Paul?
Yeah, Peter.
Hello?
I can hear you. Peter, can you hear?
Hello?
All right, I'll drop down and come back, Paul.
All right.
I
don't know if anybody
I
is
think it's
still
on
hearing
Peter's
me,
end, Brianna.
but
Yeah, Brianna, hang tight.
I'm
Let's see
still
if we
on
can
the
figure out Peter's
Spaces.
audio.
I can still see things going on, but I'm not hearing anything. Hello?
Yeah, Peter, can you hear me now? We can all hear you.
Can anybody speak up? All right, I don't really know what's going on here. Let me try going on to X on my, I heard something. Hello? Yeah, for some reason, Paul looks like his mic is muted. What's going on there?
It does that sometimes. Sometimes the speaker will need to drop down and come back. So thank you for bearing with me. I appreciate your patience. Peter, I have a two-part question. One, the first part is that the Trump administration has outlined a concept for cutting the administrative state. So my first part of the question is, if we were to cut parts of the administrative state and prevent some of the interventionist tactics happening, free the market essentially, do you think that would help to rebound economic growth within the United States? That's my first question. Two would be, what would you prescribe as real economic reforms at this point in time? Thank you.
Yeah, so I agree that we have a huge bureaucratic monstrosity that needs to be dismantled. And that there's so much that the government does that it shouldn't even do at all, at least the federal government. These functions would be better performed at the state and local level. And so the federal government should just get out of those things. And even the things that the federal government should do, and there's not that many things that it should do, it does very inefficiently. And we can reform them, and we need to do that. But when you're talking about Trump, I mean, Trump still brags about the fact that he created the Space Force. We didn't need the Space Force, right? That's another agency is the wrong direction. We needed to get rid of some of the agencies we had, not add new ones. So what we could have done is let's make the Air Force more efficient, and let's have the Space Force, whatever the Space Force was doing, let's have the Air Force, a more efficient Air Force, cover that, right? Let's not start a whole new bureaucracy that's going to now and have all kinds of probably duplicity with the Air Force. We need less government, but the thing that we need as much, or maybe even more, is we've got to reform dramatically entitlements. And when I say reform, I mean cut. That's what has to happen. Social Security right now is already spending more than $100 billion a year than it collects in taxes. So it's already broke. And the problem is going to get bigger with each passing day. So the government has got to level with the public about the fact that we can't keep the commitments that were made regarding Social Security and Medicare, right? There has to be big cuts. People who are expecting benefits have to be told they're going to get smaller benefits. There's just no way around it. We've got to cut the defense. And I think we've got to level with bondholders that they're not going to get their money back. That there's just no way that we can repay the 6 trillion in national debt. And it's not just that we can't repay the debt. If we allow interest rates to go to where they need to go, because they need to go much higher, because part of the structural problem with our economy is we don't save enough because rates have been too low. And so we don't invest enough. We just consume and borrow too much, and we borrow to consume. That's one of the worst things we do. Right? We go out and borrow money on a credit card, and we buy stuff. So all that has to change. But what's going to bring about that change is higher interest rates. But the problem is the government can't afford the higher interest rates. So we can't afford the cure because the cure is fatal for us. So we have to admit this, and we have to tell bondholders, you're not going to get all your money back. We can't pay. It's, we're broke. We have to restructure this debt. So a lot of things, nobody wants to even discuss the things that actually have to happen to really get to the root cause of these problems. And so because there's no, political will to do the right thing, and all the incentives to keep doing the wrong thing, we're going to do the wrong thing. Trump was president for 4 years, and under those 4 years, government spending went up. Warfare spending went up. Welfare spending went up. The deficits went up. The budget deficits, the trade deficits, right? All those trends continued with Trump, the same bad trends that he inherited from Obama, and then he passed the baton to Biden, and he continued in the same direction. And so, there are other reasons to prefer Trump to Biden that have to do with, maybe freedom of speech or, things like that, or the First Amendment, or other things, peace versus war. I mean, we're really broke. We can't even afford peace, right? Let alone war. War is way more expensive than peace. So peace would help, but it's not the panacea, because we've got very substantial problems that we've been sweeping under the rug for a long time. And, we got to pay the piper. Next question. Paul, I see you're unmuted.
All right. Thank you, Brianna. Next question will come from Real Muckraker.
Hey, Peter, how's it going? I've been listening to you for the last 4 years. Since 2020, I've been following your investment strategy. It's over the last year, it's finally been bearing some fruit. And my question for you is, when you're, projecting how things might go over the next decade or two. What are your projections, I would say, both in nominal terms and real terms, for the kinds of returns people could expect from gold and silver and, the junior and senior mining companies?
Yeah. Well, first of all, I mean, my investment strategy the last 4 years hasn't been exclusively gold. It's been a much broader strategy, and it has been delivering, positive returns over those 4 years, although not as good a return as people got just by buying the S&P or the Nasdaq. So we haven't been able to outperform that bubble yet. Um, and year to date, my gold strategy is beating the Nasdaq this year, even with all the AI stocks in there. And even though that gold stocks haven't gone up nearly as much as they should, with a 27% increase in the gold price, the gold strategies are beating the Nasdaq on the year. And even my broader strategies, like my value strategy, dividend pair strategies, we're up like 15, 16, 17% year to date there, which is better than the Dow and the Russell 2000, but not quite as good as the S&P or the Nasdaq. But I do think that we're going to make up a lot of that lost ground in 2025, 2026, when the dollar really rolls over. I mean, that is the key to my international investment strategy. It's the dollar, right? If we get a big break in the dollar, I mentioned that in 2008, the dollar index was at a record low, down around 71. Well, since then, it's moved up, and right now it's around 101. And if I'm right, the dollar index is going to make a new low. It's going to take out 71. I mean, it's going to have it's going to be in the 60s and maybe even in the 50s. Uh, and these other currencies are going to be losing value too in real terms. They're just going to be, gaining in relative terms against the dollar. But if I'm right and the dollar index makes a new low, between now and then, you're going to see some massive outperformance of foreign stocks, the same type of outperformance we had from 2002 to 2008, before the financial crisis. The foreign markets were running circles around the U.S. market, and not just the foreign markets, but commodities. Oil went up to $150 a barrel in 2008. In 2001, it was less than 20. We had a major commodity boom that coincided with the weak dollar, and that resulted in huge gains in the resource sector. So I think that's what we're going to repeat. Enormous gains in natural resources, commodities, gold, mining stocks, emerging markets, all that stuff I think is going to do very well. Now, I mean, I've been positioned for this for many, many years, because I thought years ago that we were closer to, that day of reckoning than we were. But, what's happening today, I think it's even more alarming than, what was happening years past. Now, is it possible that we could kick the can down the road for another 4 years? Yeah, anything is possible. I mean, but at some point, it's just impossible. You just can't do it. You just don't know, right? It's like, how many straws can you put on a camel's back? You don't know until the last one breaks it. And I don't know how many more we can put on there, but I don't want to be anywhere near that camel, because I know what's going to happen. And so I think my strategy is going to do well. That's why, again, people should be, if you're listening on the spaces, don't wait for Monday. I keep saying, because I think one of these days gold's going to really pop on a Sunday night. But you can go to Schiff Gold and you can buy some gold and silver over the weekend. Just take the price, even though, look, it's at a record high, right? You're paying 26.20, and I've been telling people all year, once gold broke above 2,000, I've been saying, just buy it, just buy it. It's broken out, buy it, buy it, buy it. Especially when it got above 2,100. And people keep wanting to wait for a pullback. There are no pullbacks. That's the point. That you're not going to get in this market if you need a big pullback. The market isn't giving you one. They're not giving you a chance. You may get a $40 or $50 pullback, but that's not even worth waiting for. That's the problem. The minute gold starts going down, people hope it goes down more, and the next thing they know, it makes a new high, and people are reluctant to buy. You got to just accept the fact that gold's going a lot higher. And it's not that gold's going up. Your money is going down. And the longer you hold your dollars, the less they're going to buy. And so you want to convert them to gold. You want to convert them to silver so you can buy stuff in the future by selling your gold or silver. Or who knows, maybe you'll use your gold or silver to buy stuff. And if you're a speculator, you mentioned my gold strategy. Look, I've got a gold fund. You could buy my gold fund anywhere. There's a no load version, EPIGX, I believe is the no load ticker. There's a load and a no load version of my gold fund, but all the discount brokers have the no load fund. I've got in that fund a lot of the junior miners. I mean, those are the ones that have really underperformed, and they have so much pent up returns embedded in them because they've been left for dead. But when institutional money and even looks at this sector seriously, and again, one of the reasons I think it's been so overlooked is because of all the hype around Bitcoin. Oh, Bitcoin is the new gold. Bitcoin is going to take over gold. Gold is worthless. Gold is nothing, right? And I think the institutions are constantly being bombarded with all this anti-gold propaganda. Even if they're not buying Bitcoin because they don't want to gamble on that, they're not buying gold either because they hear all this negative stuff. Because the whole selling point of Bitcoin is that it's the new gold. Gold is obsolete. We've got Bitcoin. So if you keep hearing gold is obsolete, well, you're not investing in it. You're not buying it. But at some point, where is it going to be? $3,000 gold, $4,000 gold? I don't know. But gold's going to keep going up. And then at some point, it's going to come on people's radars. And at some point, Bitcoin is going to crash too. And so that you're going to have both those things happening. And then people will say, okay, I guess Bitcoin wasn't the new gold after all, and then they'll start buying the only gold that exists. So that's going to happen. But I would just encourage people to not wait, get in there. We have gold went sideways for 12 or 13 years. It went from 1900 in 2011, and it didn't get really above 1900 until this year. I mean, it got barely above it, but not enough. So we just broke out of a 13-year, 12-year consolidation. To me, it's like we were in a consolidation after gold got to 850 in 1980. It pulled back immediately to about 300-400, by the mid 80s, and it stayed there until 2001. Gold was trading $300-400 an ounce for a long time. And then when it finally broke above 400, it didn't look back and it went up to 1900. And this all coincided with the Greenspan era, the cheap money, quantitative easing, artificially low interest rates. Gold is going ballistic. And this is still early in the journey. It's going a lot higher. We're in the process of destroying this fiat monetary system. And I think at the end of it is a return to the gold standard, because I don't see any other way of putting the pieces back together. Who's next?
All right. Thanks, Muckraker.
Hello?
Before we go on, real quick, can you hear me? Just for everybody else that can hear, the actual stock ticker is EPGIX for the no load gold fund.
Hello?
Next question comes from Truth Rising TV.
To hear them?
Hey, Truth Rising here.
Hello?
Yeah, the co-host was speaking, Peter. Sometimes you can't hear the co-host. He might
Again,
have
I'm
to
not
drop
hearing
down and come
anybody.
back up. Can you hear me? Peter can't hear me. Okay.
Let me see if
I'll drop down and
Paul
come back
is
up.
muted.
I don't know.
There's another speaker that's muted.
Yeah, it's just you that can't hear, Peter.
Can anybody hear me who can try to speak? I don't know. What are all the bugs that have to get out of the spaces? Every time I seem to do one, I have problems. Hello?
Yeah, it seems like it's just on your end, Peter. Everybody's able to hear.
Yeah. Somebody has the thumbs up, but what does that mean? I guess it means you guys are hearing me. Now I heard a noise.
Okay, can you hear me now, Peter?
I can hear you. So what is this, Klaus?
This is Chris from Truth Rising TV.
Oh, Truth Rising. Yeah, I saw you. I saw that you were like listed as a speaker, but I wasn't hearing anything. But I don't know why it's taking so long to go from one speaker to the next, and why there's so much silence.
It might be an internet connection, Peter, because every once in a while you do drop out.
Anyway, Truth Rising. What's on your mind?
Okay, so my first, I'm going to keep it real simple to two very simple questions. I know one question is better than two, but I'll keep it real concise. One, is it possible to prevent a dangerous scenario? Is it better to do this than not? To prevent the flooding of USD back into the local territory of the United States by essentially investigating any shipments of cash larger than a certain quantity, value. So you could say, we're going to have to investigate the reason that this cash is being shipped, and is it connected to any drug trafficking? Is it connected to any human trafficking, or would it protect us from a Soviet Union situation where the United States flooded the Soviet Union with rubles, or would that potentially harm us? Number two. Oh, go ahead, Peter.
Yeah, well, I mean, I think what's more likely than the U.S. trying to prevent dollars from coming in is that we try to prevent them from going out. And what I mean there is that we get exchange controls that prevent American citizens from converting their dollars into foreign currencies or into gold, right? The government, taxes those conversions or actually just makes them illegal. Because they may say, hey, the reason the dollar is falling is because too many people are trying to sell their dollars. And so let's stop Americans from selling their dollars. Now, because they can't stop the Japanese from selling their dollars, but they can stop Americans so that they can make it so American banks won't do the exchanges anymore. They can criminalize it. Now, all this stuff would be illegal, but I mean, they do all kinds of illegal stuff, and they could say it's a national emergency.
Yep, exactly.
But even if they say, okay, foreigners can't buy U.S. property, they make that illegal, right? You can't buy foreign. I mean, then what are they going to do with their dollars? They're still going to dump them. They're going to dump them and buy gold. So the dollars are going to get sold on the market, and then I don't know how you keep tourists from coming in, I guess, and spending them, unless if you shut down the borders. But meanwhile, then we're not going to be able to import anything. I mean, they can keep trying to put their finger in the holes in the dike every time a new one blows up, but it's not going to work, right? The only thing that would work would be to do the right thing and to allow free market capitalism to function, and make the government as small a burden as possible. So we have to shrink government, we have to cut government spending, eliminate regulations, so that the economy can right itself. And it's not going to be like an overnight thing, and it's not going to be without pain, but it will work, right? I mean, it's the only thing that will work. But no politician wants to promise that. Elect me and I'll let the economy function. It's all about what can you give me. That's why it's so frustrating to me to hear Trump campaigning about how fantastic everything is going to be, how we're going to be loving life. Everything is going to be awesome as soon as he's back in the Oval Office. All of our problems are going to disappear because he's going to solve them all real quick. That's not going to happen. And it's unfortunate to set people up for such massive disappointment. Now, I understand, this is how elections are won, right? You just just promise a bunch of pie in the sky, and whoever makes the most promises wins. But we're too broke to keep any of them.
Sure. Yeah. Okay. So speaking of pie in the sky, pick your choice, multiple choice. Pick whatever question interests you more. Here's two questions. Number one, pie in the sky. Do you think Trump might promise to back USD with American produced oil? And or two, what are the chances and what is your favor? Do you favor a sovereign default, going to war and having a multiple sovereign defaults, and potentially it might not be called a sovereign default?
Well, I don't.
Similar.
Yeah, I don't. Yeah. I don't want war. I want peace. So I don't want us to declare war. But look, we don't have to back the dollar with oil. We back it with gold. We've got plenty of gold. We obviously have to devalue the dollar and reprice gold. the official price of gold is $42 an ounce, right? So that ain't going to work. We don't have enough gold to back the dollar at $42 an ounce. Now, where does gold have to go? I don't know yet. There's a way of discovering that price, but let's say it's $20,000. So let's say if the official price of gold needs to be 20,000, which is a major devaluation of the dollar, right? Relative to where it was when Nixon took us off the gold standard, and now Trump brings us back on, right? We went off at $42 an ounce, and we come on at 20,000, right? That's a major collapse, and it shows you how bad the policy was going off the gold standard. But once we reestablish a gold standard, right, we can reestablish a confidence in the dollar, and we can rein in government spending, because now that we're back on a gold standard, the budgets have to balance. We can't run these big deficits, so we've got to cut government spending. And we've got to make a lot of these reforms that need to be made. But we need to have a real monetary system. We don't have one right now. We have this fiat system that has polluted the economy. We need real money. We need sound money. And we'd have a much stronger, more vibrant economy. Now, the good news, right? The good news that's out there is, while the government's been screwing everything up, the private sector has been, innovating and creating stuff. So we have a lot of technology that we didn't have 10 years ago, 20 years ago, that it has a lot of promise. And so, it's not all gloom and doom, right? We just got to get rid of government. And so the private sector can flourish and do what it does, raise our living standards. And, we just, the government has to just get out of the way. But, the tendency is for the government to get bigger and bigger. And every time the government creates a problem, the solution is to make the government even bigger, to cause even bigger problems. And then when those problems blow up, the solution is, well, we just need even more government than we had before, right? Nobody makes the connection between the increasing problems and the increase in the size of government. Because the government is not the solution to our problems. The government is the cause of our problems. In fact, the government is our problem. The solution
Peter,
is in the elimination of government.
I just want to agree with you on that last point, and I want to land it here. As we go into a meltdown, they're going to want to form a one world government to solve this problem and get 10 times bigger than they were before. You know what I mean?
We got to resist that. Because the one world government isn't going to be a tiny government where we have a lot of freedom. It's going to be one massive oppressive government. So we definitely don't want that. Yeah, we don't want the new world order. We want the old world order, which was freedom.
All
anyway,
right. Thank you.
Who's up?
Truth Rising. Next up will be Nicola.
Who's up next?
Hey there, Nicola.
Hello, can you hear me?
Yeah.
Hello. Hey, Peter. One question. I just wanted to tell you what I am currently doing. So basically, I am buying US bonds and watching all the gold stocks on the sidelines. So basically, when there's this Black Swan event, I collect those stocks, as weird as it might sound. But what would be your argument against that? So against buying
what?
stocks and waiting for basically a Black Swan event.
You mean, you can certainly trade gold stocks. I mean, I think you can buy any dip in gold stocks and you'll make money, because they're going to make new highs. So, and so far you can sell any rally and have an opportunity to buy back cheaper, right? I mean, because we haven't gotten to the point in a bull market where these gold stocks just keep going up and where the people who sell out lose out. I mean, so far you can sell your gold stocks, take a short-term profit, and buy them back cheaper, right? We keep getting sell-offs. We don't even need a big sell-off in gold. Gold can sell off 1% and you can have a 5-10% drop in gold stocks. Because that is how much nervousness there is. I mean, there's an old Wall Street saying that a bull market climbs a wall of worry. Well, this wall of worry in the gold market is the biggest wall of worry I've ever seen in any bull market. there is no conviction among the bulls. They're scared. I mean, if any kind of price move down in gold and they are running for the exits, like, oh my God, gold's about to crash. They don't have confidence in the market. So, but that is, I guess, how a big bull market starts out. You don't have a lot of confidence. You don't have a lot of conviction. That comes later, right? Now, the end of the bull market, where we're years and years away from that, is when all the naysayers who are going to be, talking it down the whole way, right? Gold's going to be at, 4,000, 5,000, 7,000, 10,000. They're still not going to be buying it. Oh, it's a bubble. I don't want to buy it. That's nuts, right? When those guys finally get in, that's probably near the end of the market, right? Maybe there'll be another 10% to go or some blow off top. But right now, we don't even have the gold bugs with confidence, right? They're still scared. That my clients at Schiff Gold are afraid to buy gold. Well, our phones aren't ringing off the hook. This year has been business as usual at Schiff Gold. And in fact, it's worse at other firms. Look at GLD. There's net outflows. American investors have been selling gold. This is the biggest rally in gold during a lot of people's lives, right? Because we haven't had a rally this big in 1 year since 1979. I was alive in 1979, but I was in high school, and I'm 61 now, right? So most people, this is the biggest bull run in 1 year that we've ever seen, and Americans have been selling gold the whole time, not buying it. What does that tell you? So, yeah, I mean, this is going to be a huge bull market. I mean, I remember, when I was a kid in the early 1980s, when people still listened to the radio, I remember one radio station was giving away gold coins, right? If you were the 10th person to call, or they had a contest, right, to get you to listen. And if you won the contest, you got an ounce of gold, right? Because people cared about gold in the early 1980s at the top of a bull market, right? When gold went nowhere for 20 years, that's when radio stations were giving it away as a prize, right? That's not happening today, right? No one cares about gold right now. Just like Mark Haynes said to me in 2004, who cares about the price of gold? They still don't care, even though it's over $2,000 an ounce higher. I mean, just think about that. The price of gold has gone up by more than $2,000 an ounce since I first started talking about it on CNBC. That's a big move. But, and they kicked me off the network altogether in about 2012 or 13. I haven't been on since.
But why is there a big delay between the rise of gold and between the stocks, the gold stocks?
Yeah, because again, the gold stocks are forward looking. So people are not thinking about the price of gold today. They're thinking about where the gold price is going to be in the future. And everybody just thinks the price of gold is going to be lower in the future. But also, gold companies have been a ironic victim of inflation because the cost of gold mining has gone up dramatically over the years. Inflation has made it very expensive to mine gold. But because investors don't realize how much inflation there is, the price of gold has actually not gone up as much as it should have. Gold should already be a lot higher in price than it is. And so that has weighed down the earnings of gold mining companies. And so a lot of things have happened, but that's all going to change. I think over the next several years, including this year, gold is going to go up a lot more than the cost of mining it. And these gold companies are going to make a ton of money. And they're all going to be raising their dividends. And analysts are going to be coming out with buy recommendations. There were sell recommendations put on Newmont and Barrick Gold earlier this year, back in February, March, because the analysts said we don't see any upside in gold. During the year where gold went up more than any other year since 1979, and the experts at the banks who are analysts following these companies put sell recommendations on the major mining companies because they said there's no upside in gold, right? That's how bad these guys are. Now, I know, look, a lot of these guys have a lot of paper profits, right? If you followed the advice of all these talking heads for the last 10 years, you got a big paper profit that you're sitting on in your stocks, your tech stocks and stuff. All that's going to go away. There is no way these guys are leaving this casino with any money. I mean, they'll have their own money because they charge their customers fees and commissions and stuff like that. But the customers are going to leave broke. No question about that, because they don't know when the game is over, because they don't even understand the game they're playing. They think they know, but they don't. And so they're going to get wiped out. Their clients are going to get wiped out. They might get wiped out too, assuming they're investing in the same things that they're telling their clients to buy. But I think I'm gonna end up with all their money. Anyway, thanks for the call. Who's up next?
Thank you.
Thank you, Peter. We met in Vienna.
Okay, next up is Alan Berry.
Oh, who's this?
It's Alan from Rocks and Stocks News. Peter, thanks for taking my call.
Who is it?
Alan from Rocks and Stocks News.
Oh, okay. What's up, Alan? You're a little hollow there. I think you're like in a chamber or something.
Yeah, I'm in a chamber. They got me. I'm a gold bug, and they got me locked up in a chamber. Peter, do you think that the West is ever going to get the reality that we're in a death spiral of debt that can never be fixed? And they've broken the debt system. They've broken the currency. The only real currency out there right now is gold. You got these crazy people bidding up the price of Bitcoin, which is nothing but a Ponzi scheme. And you look at these gold stocks, and they're just like, nobody cares. You got Agnico Eagle is making nothing but free cash flow. 3 record quarters of free cash flow, and they're not the next big 7. Is the West going to get this stuff?
No, look, eventually, when I was shorting the subprime mortgages in 2006, and they were trading above par. This is paper that went to zero. And it's like, I couldn't understand, how could people be so dumb as to buy this crap? But they did it. They just don't know. And, not buying gold mining stocks now is like buying the subprime mortgages back in 2006. I mean, you just,
well, it's even worse than that. They're buying a Ponzi scheme, and the U.S. dollar's a Ponzi scheme, the debt market's a Ponzi scheme, and the latest Ponzi scheme is the Bitcoin, and they're buying that instead of these gold.
Yeah, well, look, right? It's just a giant Ponzi in a Ponzi. It's look, when they write about this and people read about it or study it in the future, people won't even believe it, right? I mean, most of us, if this wasn't happening and reread about it, look, you can read the book, Popular Delusions and the Madness of Crowds, and you can read that book now, and you can laugh and think about, gee, these people were really dumb back then that they could believe some of this stuff. Well, that's what people are going to think about us. Like how so many smart people could believe so many dumb things.
But the numbers are there, Peter, for people to see. You've got 36 trillion in debt. The interest on that debt is consuming a big chunk of your tax dollars. And now you've got a politician. Like, you can't just blame the politicians. The people that vote for them are just as stupid. Let's face it. I mean, look at who they want to put in front of us.
Yeah, the problem is the national debt has gone from 1 trillion to 35 trillion, and everybody thinks that it's not a problem. Because remember, Ross Perot made the national debt his main thing, and it was only about $4 trillion back then. I mean, give or take a trillion. I don't remember exactly. Yeah. But look at where it is now. And
will they pay attention, Peter, when either Kamala Harris gets in or Trump gets in? By the time they get out of their term, the debt is going to be $50 trillion.
Interest on the debt is now bigger than defense. During the term of whoever wins, interest on the national debt will exceed Social Security or Medicare. It'll be the single biggest expense that the U.S. government has. I mean, maybe even by the end of the next term, interest on the national debt will consume 100% of tax revenue. That means all the money that we collect in taxes will just go to pay the interest on the money we've borrowed. There'll be no money left over for anything, for national defense, for Social Security, for any of these agencies. So 100% of what we need to function is going to have to be borrowed, because all of our tax revenue is already going to be earmarked for interest payments. So look, obviously, we can't get to that point. That's why I keep saying the camel's back has got to break. It is just so ridiculous. The numbers are just so extreme now.
We're in a debt spiral of debt.
Look, yep. Look, I mean, as I said, it talks about, Nero fiddling while Rome burns. Everybody is fiddling. Nobody can see this fire that's going to happen. Way, way, way worse. And I felt, like banging my head on the wall back in 2005 and 6 and 7 about the housing bubble and the financial crisis I knew was coming, and people were so oblivious. This is a million times worse than that. Right? The crisis is worse, and the frustration, because people can't see it coming, because it's so obvious that it's coming.
I'm praying too, because people need to put themselves on the gold standard. They need to buy gold stocks that are making nothing but money. Peter, I love this work that you're doing, and if you ever have a chance and would like to, I'd love to have you on my Rocks and Stocks news show to talk about all this in a more forceful way. But I don't want
to reach out to Paul Maresca at paul@schiffradio.com. He's on the call now, but you can send him an email at paul@schiffradio and let him know what you're doing, and maybe I can be on. But thanks for the call.
Go.
And by the way, if anybody wants to we're putting out a lot of good content now at Schiff Sovereign. That's my new venture with James Hickman. About every other day, we come out with a free newsletter. A lot of good stuff. It's a good read. All you got to do is go to schiffsovereign.com and give us your email address, and you'll be on our list, and you'll get those free letters as we write them. Because again, the mainstream media is just oblivious to what's going on. Right. So the only way you're going to get the truth is through independent sources. Again, I'm not the only source, but I'm one of them. But you're not going to get them from the establishment, right? At all. But thank God we got the internet, and we got something like this platform X, where people can talk freely and express these ideas. I mean, as far as the government is concerned, I'm probably spreading disinformation, because what I'm saying is the truth. But when you're a liar, right, the truth is disinformation. Okay? But anyway, who's up?
Next up is Brett.
Next question.
Yeah, hi, I'm Brett from Boynton Beach. Peter, thank you for your service. Hello.
Yeah, while I'm waiting for somebody, I'm going to thank everybody. Not everybody who's listening, I know, but I did mention that my wife Lauren,
there's a delay.
Released her first song from her album that she produced. She wrote all the songs. There's 11 songs. She sings them all. She partnered up with Tony Frattinelli, who was the guitar player for Third Eye Blind. So they worked together. He wrote the music. My wife sang the songs. And you can hear the first one. All the songs are great. I mean, there's a lot of good songs. They're going to be released kind of like sequentially. So the first one, GYB, is out. You can listen to it on iTunes.
Can anyone hear me?
You can listen to it on Spotify. In fact, her first video is on YouTube now. There's a video for the first song. And you can see that. It's Laughing Cats is the name of the band. Her name is Lauren Schiff, but I definitely would appreciate people giving it a listen and sharing it. I'm trying to help her, with this little bit of a career, which is more of a hobby than a career. I mean, she's a wife and mother, but they're good songs, and I think that people will enjoy listening to them, and it would be, good for her to have this creative outlet. She's already working on a second album, right? So she's pretty prolific in her songwriting, and she's an excellent singer. And I think if you listen to the songs, you'll agree. So again, it's Lauren Schiff. The first song is GYB. And you can listen to Spotify, iTunes, YouTube. Song is out there. Anyway, Paul, you got the next speaker yet?
Yeah. Yeah. Are you able to hear?
Yeah,
Brett?
I'm here.
Hello?
Can people hear me? Hello?
Yeah, we can hear
All
you,
right,
Brett.
great. Yeah, I'm Brett from
How
I'm Brett
are
from
we going to get the bugs out of spaces?
Yeah, Peter's not
Oh,
hearing
all
you.
right.
Brett, let me. Brett,
I'm hearing, I
let's
see
Brett, let's come
this
back
guy,
to you and
Brett
see if
Byers,
he
as
can hear
speaker.
Greg.
Brett, can you talk?
Greg.
Yeah.
Brett?
Hey Peter, how's it going?
Who's this?
This
Is
is
this
Greg.
Golden?
Yes, this is Golden Coast. Greg Crennan. I just want to say, as
Okay,
a
so I
fellow,
see, and that Brett Byer now, I see he's on mute, and I'm hearing you. I'm not really sure how it's walking, but go ahead, Golden, whatever.
thank you. As a fellow economist and also gold enthusiast investor, and I really appreciate your work from back in 2006 as far as identifying the mortgage-backed securities as an issue. Now, fast forwarding to today, do you pay attention to what's going on with the banks and their repo transactions on how they're offloading their toxic assets off their balance sheets, showing that they're more solvent than they really are? It was reported recently that Goldman Sachs is, taking on some losses for the quarter, as well as how the bank term funding program is covering up the insolvency of the banks, which that money has to come due, paid back by March. And if you're following or hearing anything else on that.
Yeah, I've been saying for a long time, because I predicted it for a long time before it happened, but that entire banking system is insolvent. And that is one of the major reasons that the Fed is now cutting rates, but it's not going to work. And the reason the banks are insolvent is because they spent years loaning money at 3 and 4%, whether it was buying long-term treasuries or investing in mortgage-backed securities or originating mortgages. When Americans were busy refinancing their mortgages from 7% to 4%, everybody said, this is great because the homeowners get a lower payment. I was the only guy that out there that was saying, yeah, but it's lousy for the lenders because now they're stuck with these low coupons on their mortgages. What's going to happen when interest rates eventually go up? Right? All of these financial institutions are going to be insolvent. In 2008, the reason banks were in trouble was because mortgages were going into default. But most of their mortgages didn't go into default. But the small percentage that did was enough to bankrupt them because real estate prices went down. And so the collateral for the mortgages wasn't there. And the banks didn't really have a lot of capital. They have a lot of loans on top of a small amount of capital, thanks to this fractional reserve system, which is government guaranteed and all that. So it's a very highly leveraged, risky house of cards that the Fed has created with our banking system. Well, today, the problem is much worse because it's not the mortgages that default that are the problem. It's all the mortgages that are current because all those mortgages are worth less than they were when they were originated. And so the banks are in trouble. And the commercial real estate market has imploded. That wasn't even an issue in 2008. Commercial real estate went up. It has collapsed. There's massive losses in regional banks on commercial loans because they're not going to get repaid. And there's going to be huge defaults and the banks are going to lose a ton of money. So the whole banking system is insolvent. It started to blow up over a year ago with Signature Bank and what was the big one? Silicon Valley Bank. Yeah. So
First Republic.
Yeah, that's when the Fed stopped hiking rates. Right. It wasn't when they beat inflation. It was when banks started to fail. That's when they stopped hiking.
Yeah, no. As far as what the banks are experiencing with the BTFP being drained, that money is still sloshing around there. So I think it came down to like something like 98 billion in the BTFP Fed window, and the discount window has come down a little bit from the summer high. So there's definitely some stress and issues that are going on still, and of course, no one talks about these issues because why would they want to let people know that there's issues going on in the banking sector?
Oh yeah. Yep. All right. Thanks for pointing that out.
Yeah, no worries. Are you are you interested in possibly shorting any of the banks due to the insolvency in just a matter of time before the house of cards come crumbling down, or you're just going to stay away from that whole sector even though that such
I'm not
down event could bring everything down with it.
Peter, are you there?
Hey, did we lose Peter?
I mean, long the stuff that I think is going up. Yeah. Hello?
Peter, is your internet connection solid? Because you're dropping out.
Hello? Golden, did I lose you?
Yeah, there was just a little bit of an issue. So just basically with the insolvency issues with the banks, are you looking at possibly any of the banks as a position as also protecting the downside risk?
Yeah, as I said, I'm not short right now. But I we don't really own. We're so under invested in the financials. Like if you look at our portfolio, there may be one Canadian bank. I have to check if we still own it. But we're so underweight. Like if you look at my value strategy, my value fund, my dividend payer fund, the financials are probably 20-25% of the benchmark. And at most we're like 2 or 3% financials, if even that. We may be zero. I have to check. But we're very, very underweight. So that's kind of a way that we're short, is that we just don't own them, and we're long other things.
Got it. Thanks.
All right. Who else is ready to go?
Peter, are you able to hear me? I just want to make sure that you can see your internet is solid, because
we got to see if we can line people up like in advance, so it's a seamless transition from one person to the next.
Yeah, if you can internet, make sure that solid. Next up is Raymond. Let's see.
I mean, I can start talking and just filling up the gap, but then I won't.
Hey, Peter, how are
really
you?
know when
can you hear
somebody
me?
is able to speak. But I keep seeing like mics being muted and unmuted.
Peter, can you hear me?
But
I can hear you, Raymond. Peter, it's Peter's issue.
Raymond?
Peter's internet. I think.
Are you able to talk?
Yeah, can you hear
Looks
me,
like
Peter?
You came off of mute.
Can you hear me, Peter?
I don't know.
Hello?
I see. All right, there's 19 requests
Hello?
to speak. I see that. Oh, I just heard a noise. Hello?
Hello? Hello, Peter, can you hear me?
Right. Hello?
Can you hear me?
Is anybody hearing me?
Hello? I'm here. I can hear you, Peter. Can you hear me?
Yeah, everybody is like moving around.
Yeah, we
I see all these, people's faces just jumping up and down. But yeah. But
Peter, check your internet.
Before I do one of these things again, we got to figure this out. I got to figure out
Paul,
why it isn't more seamless. I don't know. Maybe if somebody who is able to talk has an idea. I mean, maybe you participated in more of these spaces to know why it is that it's so difficult to enable somebody to talk as it is, because it would be it really undermines the whole platform when it's so difficult for people who want to speak, because that's the whole purpose of my doing the spaces, as opposed to just doing another podcast, is because it's interactive. People can talk, they can make points, they can ask questions, but for some reason it's just so difficult to do that. It's really easy to listen. I see a lot of people that are here just listening, but the point is to have the interaction. And I mean, hopefully people are hearing me, at least, even though I can't hear.
We're all hearing
anybody
you, Peter.
talking, and I don't know if other people are talking, and it's just me that can't hear them. Right? Is it something wrong with me being the host that I can't hear? But I see people are leaving the spaces because I can't really continue it.
Are you using a Bluetooth headset or something?
I don't know.
Are you have an earpiece in? Is your Wi-Fi bad?
Anyway, yeah. I mean, I was prepared to do this for longer, but I guess there may not be any reason to do it. I'll just kind of try to finish up here. I know there's still a lot of people that are on, and it's just a shame that
Brett
I
or
can't
Raymond,
figure
feel
out, or
free
Paul
to
can't figure
start
out
talking. See if
how
we can hear
Okay,
you.
if someone can hear me.
Who's that?
Yeah.
Peter, you can hear me.
I just heard somebody.
You there?
Yeah, I can hear
It's
somebody,
me,
but they're
Peter
not
Raymond.
talking now.
Peter.
Who
It
is
sounds
that
like he
that
can
just
hear
said,
you,
"Can you
Raymond.
hear me?" Hello?
Raymond, I think that's you.
Yeah,
Has
I was
anybody,
asking a question. Is it okay?
I don't even know if anybody's hearing me. If somebody gets through, could you let me know if the things that I've been saying about why no one can hear me, if anyone's been able to hear that?
Okay, Peter, can you hear me?
Yes. Who is this?
All right, this is Brett from Boynton Beach. We can hear everything you're saying, so that part is working. That's good.
Okay, between me and you, between you now talking and me, did you hear anybody else talking?
Raymond tried to speak.
I didn't hear Raymond.
Okay.
But just that. So just he tried to speak, and now you?
So it looks like you can hear me, but yeah, so I can
Yeah.
hear.
I hear you, and I don't hear anybody else. I don't know if anybody else is talking.
Yeah,
but I can only hear.
Raymond is also trying to speak, but it's kind of muffled.
Yeah, let's go.
Well, I see
I'm
Raymond
putting Raymond on mute
a
for
muted
now.
mic.
And
But anyway,
Brett,
since you got
Brett, are
through,
you able to hear me?
what's on your mind?
Yeah, all right. Yeah, well, first of all, yeah.
Brett, before you start talking, just let Peter know that it might be either a Bluetooth headset or his Wi-Fi.
Yeah, I think I just.
No,
go ahead.
Peter, I'm here. And actually, Paul is trying to get a message to you. He's asking you if you're on a Bluetooth. You're not able to hear Paul. I can see.
Right. No, well, I'm just on my phone. I'm on my cell phone.
Okay. Okay, so
It's
Paul.
not on a Bluetooth.
So Paul,
I'm on my cell phone.
Peter can't hear you, Paul. Okay, so you're gonna have to send him a message in some other format.
Oh, you know what? It's probably the internet that I'm on. You know, I'm in this condo. I wonder. I'm going to try to change my Wi-Fi. I wonder. I mean, I'm on the wrong Wi-Fi, but it's still working. So I don't know if that's it. I don't know if I should risk changing it because I might disconnect myself.
Anyway, Peter, don't give up because I think this is a great, forum, and I thank you for speaking out. You know, all these important topics when you're definitely going against the grain of mainstream media who has brainwashed everyone. But I want to ask you. I don't know if you're familiar with Jack Mallers. He's the CEO of Strike. I've heard him speak.
Yeah, you know, I just did a Bitcoin debate with Jack Mallers.
Oh.
On and you know, the interesting thing is I didn't even realize I was going to be debating him. I just thought I was going to be interviewed. And I go up and he's like, "Oh, we got Jack Mallers." I go, "Really?" He said, "You guys are going to debate gold Bitcoin." I go, "Oh, all right. Well, I didn't know that, but fine." It's like nobody told me in advance, but I had never met him before, and I had never been on, on the same debate or show as him. But yeah, I mean, he seemed like a nice kid. I'd seen him, and I keep calling him a kid. I mean, he's in his obviously, he's not that young, but compared to when you're 61, everybody's a kid. But
yeah, he reminds me of Michael J. Fox.
But yeah. But I have seen him. I mean, he's very passionate, about his belief. I think, like, unlike a guy like Michael Saylor, who I think is completely full of shit, I think Mallers is sincere. I think he actually believes Bitcoin. I don't believe Saylor. I think Saylor is lying. The stuff that he says to me is just so outrageous. He can't possibly believe it.
So, yeah.
But what about Mallers?
Yeah, so he just came off. Yeah, he's just this real confident guy, and like you said, he seems really sincere. So he sees that Bitcoin as a replacement currency, not even a hedge, but a replacement currency for the dollar because of all the catastrophe, the catastrophic things that you're predicting. So that's all I want to ask. Just what do you think about that?
Yeah, there are a lot of young guys. Most of them are young, like Mallers and other people who, were educated by me, or others, but they learned the Austrian economics, and they learned what I've been teaching, either from me directly or from others that have a similar perspective. And they also discovered Bitcoin kind of around the same time. And to them, Bitcoin is the solution, that it's better than gold, right? And they got on this like, and like my own son, right? I had a son, or I still have a son, who got all into Bitcoin for a while, because people get caught up in it, and so I don't doubt that he and there are other people that are sincere. Now, part of it too is you get a bias. Like when I remember the housing bubble in 2002 and 3 and 4 and 5, I found that people who owned homes, and I was renting at the time, but people who owned homes could not accept the fact that their house was going to go down in value. And I think one of the reasons for that is they had such a vested interest in their house going up, because it was their biggest asset, and that was their livelihood was in the home appreciation. That's where they were getting all their wealth, and they didn't want to even consider the possibility that this gravy train was going to come to an end. And I think that happens in Bitcoin even to a bigger degree, especially when you've kind of invested so heavily in Bitcoin, not just because you own it, but you've started a business that's based on it. So you're kind of all in, like your whole life is involved around Bitcoin. You kind of psychologically or subconsciously, you just tune everything out that doesn't validate what you believe, because you can't accept that your belief system is wrong. Maybe like a religion or something like that, or people cults. So that's why I can't I can't really argue with people. I can never like persuade people. I can't convince people. And I know people can say the same. Well, Peter Schiff, you're just worshiping at the gold religion. You're doing the same thing. You're just oblivious. You've got a gold business, so yeah, I have a gold business, but it's a small part of my overall business. I mean, my main business is asset management. Gold is a small part of what I do. And the only reason I sell gold is because I believe people should have it. It's not like I've got this gold business and I've got to sell gold. I started the gold business because I think people need to own gold, and I want to make sure they buy it without getting ripped off. So I tell people to invest in the things that I think they should invest in. And if I thought they should invest in Bitcoin, I could tell them. I mean, I have an asset management company. There's nothing stopping me from buying Bitcoin ETFs, with my customers' money, right? I mean, I could be all in on Bitcoin. I could charge my customers a fee to buy a bunch of Bitcoin, or there's thousands of cryptocurrencies I could be buying, right? I mean, I'm not. So, my business is not predicated on gold succeeding the way somebody who's in Bitcoin, right? Bitcoin crashes, the whole business is gone. And so I think I'm objective, in my thoughts on it. People just think that I'm not objective. That in fact, a lot of people just think I'm lying, and that's how brainwashed they are. They think, well, Peter can't possibly believe what he's saying about Bitcoin. He can't possibly be this smart and this dumb, right? Like, because they're so convinced they're right, it doesn't make any sense to them that I'm wrong, that I would say this. So they assume that I'm just lying, that I secretly am hodling all this Bitcoin, and like I'm bashing Bitcoin to get the price down so I can buy more. I mean, this is how people are rationalizing my take, because they don't even want to consider what I'm saying might be correct.
Yeah, is what you're saying predicated on it must have tangible value? Is that what it is?
No, it's not tangible, because intangible things can have value. Like I mentioned, my wife's music, right? She wrote a song and she sings a song. That I can't hold that song in my hand. I can't touch it. I can't feel it. I can't smell it, but I can enjoy it. I can listen to it. I can sing along to it. I can dance to it. So it has some value. It can improve my day. I can play it at a party. I can listen to it when I'm driving in my car, right? So music has value, even though it's not tangible, right? So it's not Bitcoin's lack of tangibleness, if that's a word, that is it's the lack of utility, the lack of Bitcoin doing anything to improve my life or make, anything. I can't use it for anything. I can listen to music. I can't listen to Bitcoin. Doesn't make any noise, right? I can't do anything with it. Like they compare it to the internet. I use the internet all the time. I'm using the internet right now to do this spaces. Nobody uses Bitcoin. Yes, I can sell my Bitcoin. I can give it to somebody else. Yeah, but that doesn't count. It's like if you just have your Bitcoin and you don't have anybody else, what can you do with it? You can't do anything with it.
Oh, that brings
And
up.
even though
I'm sorry, Peter.
and even though you say, well, I could transfer it to somebody, yeah, but you could transfer. There's 20,000 cryptocurrencies that you could transfer to somebody. You don't need Bitcoin, you know. So it doesn't do anything that's unique. It doesn't do anything that I can't do with any other crypto token on any other blockchain.
Yeah, speaking of
You know,
blockchain, so there was the claim that blockchain could have prevented the CrowdStrike issue blackout.
I don't know. I mean, I don't know enough about why the CloudStrike thing happened to know how blockchain may have prevented it. You know, but even if blockchain could prevent it, I mean, that doesn't mean that the Bitcoin itself has that much value. I mean, I don't know. I mean, and is it possible that Bitcoin has some value that's above zero? Yes, it is possible that it has some value that's above zero, but that value could be $10. I mean, I don't know, right? Where it is, but I don't think it's anywhere near the current price because the only thing people do with it is hold on to it. And here we again. I mentioned Michael Saylor. He posted on X again today. He just bought a bunch more Bitcoin. That's probably why the price went up because he went in there and borrowed a bunch of money and bought even more. But the interesting thing is it can't make a new high despite all the buying, despite all the ETFs, despite all that leverage. It's not going anywhere.
Okay, thank you, Brett.
Anyway, was
Next up,
anybody
let's
else
go
able
with
to get
Carlos.
through? Is it?
Carlos, are you there?
I'm here. Can you hear me okay?
Yeah, I can hear you.
I
Paul's
can hear
saying
you.
Peter, can
my
you hear me?
audio keeps dropping, so maybe I think I'm on the wrong Wi-Fi here at the condo. I didn't look. There's so many damn Wi-Fis that I can connect to. So I don't know though if I switch Wi-Fi's if I'm going to drop off. So I don't want
Yeah,
to. I don't want to risk it.
right. It might reconnect you. Yeah, but Peter, just wanted your thoughts on the any type of foreign currencies in terms of markets. I know that you have a vast portfolio of different investments, but is there any particular area that you're really focused on? Asia Pacific. What are you really looking at in terms of the expansion of markets as we kind of move away from a Western-based model?
Yeah, I mean we're mainly focused on the developed markets, although I have an entire fund that's emerging markets, and I think that of my equity funds, other than my gold fund, I think that really has the most upside potential right now. Um, but I mean, I'm just wanting to buy good quality businesses that have a lot of assets, tangible, intangible, just valuable assets that are capable of producing income that can be shared with the shareholders, right? That can be distributed as dividends. And I want to own companies that can raise their prices as inflation raises their costs. I don't want to be a big investor in a company that's going to be in trouble because inflation is going to destroy the ability of their customers to buy their products. I mean, that's what's going to happen. I mean, that's really how inflation lowers your standard of living, is because things get so expensive that you have to do without things. Well, you can't do without everything. So you're going to eat, right? There are things you're going to do. No matter how expensive things get, there are still some things you're not going to give up. And so my portfolios are going to be focused on the things that people aren't going to give up. And I don't want to own the things that are easily, done without, right? Or you can cut back substantially on those businesses. Where the consumer has a lot of discretion. If I have extra money, I'll buy it. If I don't, I won't, right? Because they won't. They won't. So they won't have the money, so they won't be buying the products or the services. And I do think you want to be focused internationally, because I think Americans have been spending borrowed money, and when they can't borrow anymore, they can't spend anymore. And I think the people who have been loaning us the money, when they stop loaning us the money, they're going to have the money themselves, so they'll spend it. So I think you're going to see an increase in foreign consumption as you see a decrease in American consumption. And that makes sense. The dollar loses its reserve currency status, and Americans no longer have the exorbitant privilege of spending those dollars that we create for nothing. And so we lose, and the rest of the world gains. The opposite is happening right now. We win, and the rest of the world loses. They're on the losing side of this deal.
Peter, how much further do you see the credit market expanding with the Fed lowering rates? Is it going to be more just a recycle of the same, where people are redoing loans and so forth, or do you see a big demand as far as consumers to increase spending based upon that? I mean, we know that consumer debt's at an all-time high. I mean, what's your thoughts on that?
Well, consumers are going to keep spending. It's just that they're going to buy less and less stuff, because the stuff that they're buying is going to get more and more expensive. So, and people aren't going to save, right? There's no incentive to save because the interest rates are too low relative to inflation. So people are going to spend everything they earn. In fact, they're going to spend everything they can borrow, to the extent they can borrow. But the problem is they're going to buy less and less, even though they're spending more and more. Right? And so the government can keep claiming, oh, the economy is great. Look, spending is up. Retail sales are up. Yes. Eventually the only thing we're going to buy is groceries, but they're going to be so expensive that we'll be able to claim, great, the economy is strong. Look at the consumer. The average guy is now spending $1,000 a week on groceries, right? We really have a great economy.
Right. Did you see, Peter, the Dollar General forecast? Their most recent board meeting and talking about the futures, and the only reason I point that out is because as the corrosion that happens across the middle class, we're seeing America's working poor even struggling even more. And I think ideally, Dollar General is one of those places that a lot of the working poor went to, but now they're even struggling for same store sales for a lot of reasons. But did you see their financial
I
outlook?
remember seeing that. But look at the example of today. Look at FedEx, was down 15% today because of their weak earnings, because they're not shipping as much stuff, and that's because people don't have their groceries FedEx, right? It's like people are spending money on necessities, and so they don't have enough money left over to buy stuff that needs to be shipped Federal Express.
All right. Thank you, Peter. I'll land it there.
All right. Thanks a lot. Do we have another speaker lined up?
Yeah. Next up is VR, Real Deal CPA.
Hello?
Hello, Peter?
Yeah. Oh, that was quick. Who's up?
Hey, this is VR. I just had a couple questions for you. Why do you think there's this like cult following for Bitcoin and that doesn't exist for gold? And what would gold need to do to get that sort of following so that way people kind of believe in it more?
Well, I mean, first of all, Bitcoin is new and exciting, and it has a hot story, right? I mean, you have an asset that 13 years ago was pennies, right? You could have bought a bit, how I forget how many Bitcoin were used to buy that pizza, thousands of them, whatever it was. So Bitcoin was nothing, now it's huge. It's $60,000 a Bitcoin. And people have made a tremendous amount of money who got into Bitcoin early. I mean, nobody has really made a lot of money in gold. I mean, even though gold has gone up, it's gone up, a lot. It's nothing compared to what Bitcoin did or, tech stocks. So, gold miners are not the rich guys, but there are a lot of Bitcoiners. I mean, I'm surrounded in Puerto Rico by people who made millions and even billions in Bitcoin, Ethereum, and stuff like that. And so the fact that so much money was made by so many young people, like all these people that made all this money, it was younger people that got into it initially, right? And they got very very rich very quickly, and they got their Lambos, and it's very intoxicating. Other people want to get rich too, and so it's the get rich quick scheme, that nature of it, that has attracted it. But there's a whole, if you just look the way it's all evolved, and there's a whole language, the FUD, and
Right.
the hodling, and all the stuff. There's probably a whole dictionary of Bitcoin terminology that people use that are in the circle. And of course, just by nature of it, right? If you think about how Bitcoin works, you got to get more people to buy it, right? Because nobody actually uses it for anything. So you got to get more people to buy it. You got to grow the pyramid. And so you have to proselytize.
I have a
I
question
said
on
they're
that.
almost like a Harriet Kirchner. It's like the minute you believe in, the minute you buy Bitcoin, you want to get your friends and your family to buy Bitcoin, right? They all got to, and then so it's like you've got to spread the gospel once you own it. So it's just, that is just the nature of this thing. And gold isn't like that. I mean, gold is actually used. I mean, nobody has to convince people to buy gold. People need gold, right? Gold is used all the time.
But don't you think
Gold,
that
gold sells itself.
don't you think that you can benefit from maybe the Bitcoin marketing by maybe positioning gold as sort of like a Bitcoin insurance instead of like having them at odds with each other? You could sort of go
Well,
off of their marketing.
yeah. Well, I tell people that all the time. I tell people, look, you should hedge your Bitcoin by buying gold, because what if you're wrong, right? I tell people all the time, look, even if you think I'm wrong about Bitcoin, you should still sell some of your Bitcoin in case I'm right, and maybe buy some gold or buy some stocks or buy some real estate. I mean, I know people that are all in on Bitcoin. They don't even want to diversify. They're so sure they're right. But they need to, but they're stuck in this cult mentality that they don't want to sell any Bitcoin. People are so afraid to sell their Bitcoin because they're afraid that the Bitcoin they sell is going to be worth so much, and they're going to regret the fact that they sold it. They're afraid to sell. Well, eventually they're going to be afraid not to sell, right, when the bottom drops out. But people don't want to miss out. They don't want to sell their Bitcoin at 60,000 because they're going to miss the moonshot to 1 million. Well, you got to stop that mentality. I tell people, look, you can sell, let's say you got $1 million worth of Bitcoin and you think it's going to go to, Michael Saylor says it's going to go to 30 million. His bear case scenario is like 7 million or whatever it is. Craziness. But if you actually believe that, and you have $1 million in Bitcoin right now, so sell half of it, you're still going to be insanely rich on the other half if Michael Saylor is right. Right. But if I'm right and you have all your money in Bitcoin, then you're broke. So you might as well just take some of that money. Don't be a pig, right? There's a saying on Wall Street: bulls make money, bears make money, pigs get slaughtered. If you have all your money in Bitcoin, you're being a pig and you could get slaughtered. So take some off the top, sell some, and invest it in something else. Even, so what? You still make money if Bitcoin goes up. You got a bunch of Bitcoin. I'm not telling people you don't have to sell all your Bitcoin. I mean, if it were me, yeah, I would sell all my Bitcoin. I don't own any Bitcoin. I have no interest in buying any Bitcoin. And even though I concede Bitcoin could go to 100,000, it's possible, but it's 60,000 right now. That is not enough return to even pique my interest compared to what I think I can make on my gold stocks. Now, yeah, Bitcoin had great upside if you bought it at $10, $100, even $1,000. There was a lot of upside. that upside's not there anymore. Even if it goes to 200,000, that's not enough to make it worth the risk that it goes to zero or close enough. Doesn't have to go to zero. What if Bitcoin goes to 1,000? That's still a high price compared to where it started. But if it goes to 1,000, everybody's wiped out. Right. So, I don't want to take that chance. I don't want to buy Bitcoin at 60,000 because it might go to 100,000 or 200,000 when it can also go to 1,000.
Yeah, but people play
The
that
risk reward's not there.
people play that speculation game with stocks all the time, where they just try to ride the wave up. I'm sure there's plenty of people doing that with Bitcoin.
Yeah, I don't do that with stocks either. I buy stocks that I think are good businesses that have, good cash flow, good dividends, good earnings. And, I'm not just buying some stock because I hope some fool pays a higher price for the same stock. I'm building good portfolios of income producing businesses that I want to own. Bitcoin is not an income producing business. It doesn't produce anything. It's just a string of numbers that have no actual value in the world. You can't do anything with that string of numbers. So yes, if I want to bet that somebody else is going to pay a higher price for that string of numbers, but I don't want to play that game. I don't want to play that gambling greater fool game. Because I might end up as the greatest fool. I could be stuck as the bag holder. There's some real opportunities right now. Did I miss out on an opportunity on Bitcoin? Of course. I could have bought a lot of Bitcoin early on. I knew about Bitcoin probably before anybody on this call, right? I had the chance to buy it. I actually thought about buying it when it was under $10. I don't remember how much lower. It's hard to say, but it was nothing when I looked at it.
And why didn't you speculate with it like you would maybe another investment?
Because I don't do. I'm just not a big speculator. I haven't. I've passed on a lot of other speculative opportunities. I just didn't do it. I didn't see the bubble potential in it at that time. By the time I saw the bubble potential, it was after it went up to 1,000, and I was like, "Shit! I could have bought that for next to nothing." And it went up to 1,000 in 2000 and forget 13 or something. It went up, and then it pulled back down. And for a few years, it was like 200, 300, and I actually thought about buying some then, and I just couldn't get over the fact that I didn't buy it for less than $10. And now I'm going to buy it for 300 or 400. Even though by then I thought, based on what I'm seeing, and I had some friends, hedge fund guys that told me they were buying it. And I was like, really? You're buying this crap? And I saw smart, sophisticated people buying it. I was like, this thing could have a run.
Yeah.
And
Well,
I just didn't buy it. But if I had bought it then, I'd be long gone by now, I think,
Well, I've
but
had the same experience with gold.
I only would have bought it because I thought other people were going to be dumb enough to buy it at a higher price. It wouldn't have been because I actually believed that it was going to work.
Peter, do you feel the same even with the ETFs now bringing in money flow?
Well, I think the ETFs are part of the exit strategy. See, because what nobody is talking about other than me is you had 11 Bitcoin ETFs launched, 10 new ones, and one, switched over the grayscale. But you had all this money come into these ETFs in January. And since then, the price of Bitcoin has barely moved. I mean, most of the gains this year happened like the 2 weeks before the ETFs were launched, people trying to front run them. And then there was another gain. But Bitcoin is 62,000 right now, or 60, it was 74,000 in early March. Bitcoin is lower today than it was at its peak in 2001 when it got to 69,000. So all of this ETF money flowing in, and BlackRock and Fidelity, and of course now they all love Bitcoin now, right? Because they're making money on their ETFs, right? So now they're out there. You see Larry Fink out there. Oh yeah, Bitcoin is real. He's lying off his ass. These guys, they only like it because they can make money off of it now, right? It's like that's where you got that's what happened with Mr. Wonderful, Kevin O'Leary, right? He didn't like Bitcoin until Bankman-Fried gave him $10 million to like it. Then he liked it, right? So a lot of people have been corrupted by the money. And Wall Street is notorious for doing this. They will sell their customers any shit that the customers want to buy. And they wanted to buy Bitcoin, and so they're selling it to them. But that's the only reason that these guys are recommending it, because now they have an ETF to make easy money managing it. But the key is you've had all this money flow into these ETFs that went into the spot market and bought a bunch of Bitcoin, and the price of Bitcoin didn't go up. So what does that mean? That means that there was another big pack of money that wanted to get out of Bitcoin, that sold the Bitcoin to the ETFs. So I think the smart money wasn't the mom and pop who bought a Bitcoin ETF on their Robinhood app. I don't think that's the smart money. I think the smart money are the people who sold their Bitcoin to that ETF. As they're trying to get all the other suckers to hodl with their diamond hands, they were selling their Bitcoin and cashing out. And, what I think is the big risk to Bitcoin now is the ETF selling. I think at some point, we haven't seen it yet, but at some point, you're going to see a huge exodus of frustrated Bitcoin speculators who want to get out. And I think the market's going to implode. I think you're going to see like the biggest crash we've ever seen in Bitcoin, because I don't know how the ETFs are going to get out. Because in the past, when there's been a big drop in Bitcoin, Tether comes to the rescue. All of a sudden, there's Tethers around to buy Bitcoin. Well, when the ETFs start to sell, the Tethers don't count. You can't buy with Tether because they can't put Tether in somebody's brokerage account. So when everybody just says, "Get me out of my Bitcoin ETF" at the market today, now all these ETFs have to dump their Bitcoin onto the market, no limit. I'm just dumping at the market, right? You have all this mass selling, millions of Bitcoin dumped onto the market, and they have to be bought that day, right? Somebody has to buy, and nobody can buy with Tether. They have to be actual dollars that are going to get wired in to the brokerage account. I just think it's going to be a bottomless pit. Now, maybe they'll just halt all trading in Bitcoin ETFs. Maybe that's what they'll have to do. They'll have to halt liquidations. They'll have to get the NYSE to just stop trading, because we physically can't sell these Bitcoin because there's no market for them. So yeah, this is going to happen. The only question is when. What's going to set it off? But it's coming. And there's, nobody could have seen this coming, right? Who could have imagined this? Yeah, it's obvious, right? I'm telling you exactly what's going to happen with these ETFs. So when it does happen, you'll know that it wasn't like nobody could have predicted it.
Is there a time frame?
Obvious. Well, no, I don't know when it's. I'm not that smart. I know that it's going to happen. I'm not smart enough to tell you exactly when.
No.
Nobody's that smart. But anyway,
okay.
Do we have anything else
next
queued up?
Question, let's try punt turn.
I can probably go to about 6:30. Then I gotta go run for dinner. So that's like another half hour. Who's up next? Hello?
Punt turn, are you there?
Hello? Anybody there? I hear some people moving around.
Peter, can you hear me?
Hello?
Josh, how about you?
Yep. Yo, can you hear me?
Who's that?
Can you hear
Yep.
me?
Who's on? Josh?
Yeah, it's me.
Okay.
Okay. I just want to make sure Peter could hear me before I ask the question.
Yeah, we just had a pop in the number of listeners too. We're almost up to.
Yeah, it's because there's no more technical difficulties. All right. Well, Peter, I've been listening to you for a couple of years now. Giant fan. My investment strategy is based on like what you say. I listen to everything you say. But here's one question I got for you. So I get your point about betting on the Fed lowering rates because it's politically convenient and no one wants to be responsible for a recession, even if it's the cure. But do you consider the possibility that the Fed might someday do the right thing and allow rates to rise? Because it's like you're always betting on them doing the wrong thing. But if they ever did the fiscally responsible thing, wouldn't it just screw up your investment strategy?
Well, no, I mean, because if they do the right thing, there's no way they're going to do the right thing without a weaker dollar or a higher gold price. So I think I still make money if they do the right thing. And if they do the right thing, they're going to prick bubbles in a lot of assets that I don't own. So I think I still make money if the Fed does the right thing. I just make even more money if they do the wrong thing. Now, that said, I would rather the government do the right thing. I would rather make less money, but have the government do the right thing for the country, for my kids, I care more about the country than about my wealth. But that expression, don't fight the Fed. I think the Fed's going to do the wrong thing. And so that's how I'm going to invest. Now, they have inflated a lot of bubbles, and I could have gone along for the ride, and I generally didn't do it because I was always afraid that I wouldn't get out in time. And it's easy to invest in a bubble if you don't know it's a bubble. It's a lot harder to do it knowing what it is. But yeah, I mean, the only precedent there is for the government doing the right thing is when they've exhausted all the other options, and they're in a major crisis. And then they'll maybe do the right thing. And maybe they won't, even under those circumstances. But generally, that's the only time that politicians will do the right thing, when they're screwed either way, right? Because things are so bad. Look, you got Milei elected in Argentina, and there, it's not like he was there. He wasn't, he got elected to do the right thing, but only because, the public was so fed up with politicians promising government solutions to problems that kept getting worse. And they were so bad that the population was ready for something different. We're not at that point or even close to that point in the United States. And that's pretty obvious from both of the political campaigns that are being waged right now. And from what the Fed is doing. So, but yes, it is possible. It is possible when inflation really starts to go up that the Fed will say, to hell with the economy and the banking sector and government finances. We're not going to let the dollar completely implode. We're not going to allow hyperinflation. We're going to let rates go up. And maybe they have to go to 20% or maybe 30%. I don't know where they're going to go. They went to 20% under Volcker. They may have to go much higher this time. But that means that means massive losses on Wall Street and Main Street. I mean, that means not only do banks fail like they did in 2008, but there are no bailouts and the depositors lose their money. Now, they may not lose all their money, but people that have money at Wells Fargo and Bank of America, they're not going to get all their money back. They're going to get a portion of their money back, but they're going to lose a lot of their money. Now, will the governments allow that? Will the politicians allow voters to lose money in their bank accounts? I don't know, right? The alternative is they bail out the banks and then nobody loses their money, but their money loses almost all of its value, right? That's where you get the hyperinflation, right? Okay, yeah, you didn't lose any of your money. Your $1 million is still at the bank, but it was $1 million Uber ride to get to the bank, right? To get your $1 million, whatever. So, but those are the difficult choices. But I keep betting that the government and the Fed is unfortunately part of the government, even though it's not supposed to be, that they will always do what's better politics, in their interest, in the now, in the moment they make a decision, it's based on what's best for them politically. And that's always the worst thing economically.
Right. So
Doing the right thing always involves some short-term sacrifice that politicians don't want any part of, because it's not in their interest, because they could lose their job, and so that's their primary concern.
Right. So,
And they're
oh, sorry, my bad. I keep thinking you're done speaking. But so like in some fantasy dream world scenario where there was some libertarian who became Fed chair, something like that, and they actually did do the right thing, or like you suspected, like, damn, like maybe the Fed's actually going to do the right thing. Would you tell everyone like sell your gold? They're actually going to do the right thing now, or is it just like keep gold no matter what? You know what I mean?
Well, I wouldn't have to. If they do the right thing, I wouldn't have to tell them to sell their gold. We'd basically end up on a gold standard. But if they do the right thing, hold on, I'm just texting, then I would be able to change my investment strategy. So let's say they do the right thing. If they do the right thing, a lot of quality U.S. stocks are going to be incredibly inexpensive. Now, a lot of U.S. companies are going to go bankrupt, but a lot of companies won't, but their stocks will be very cheap. I'd be happy to buy them. I'd be happy to change my investment strategy if the U.S. did the right thing. And as a result of doing the right thing, U.S. stocks were very, very cheap. And I was able to buy them. So, yeah, I mean, I would love to reorient my investment strategy following a major economic collapse that was precipitated by the Fed doing the right thing and the U.S. government doing the right thing. Because I would also know that there was light at the end of the tunnel, right? And there literally would be. There'd be blood in the streets. To do the right thing at this point, it's blood in the streets, and that's when you want to buy, right? And a lot of people aren't going to have money to buy. They're going to be broke. But if I'm right, by the time they do the right thing, gold will be much, much higher. The dollar will be much lower, and I'll be a lot richer. And so I'll have a lot of dry powder. I'll have a lot of buying power to be able to buy assets when few people have the money to buy them. And there'll be a lot of people that are selling because they need to sell. But we're nowhere near that. We haven't done anything right. Everything we've done has been wrong because it's the same playbook. It's the same Keynesian bullshit playbook that the bankers and the politicians have been using. And nobody admits that it's wrong. Nobody blames the Fed for the 2008 financial crisis. They all credit the Fed for saving the day. So they don't get it.
Peter, can you hear me?
Yeah.
Okay, so first and foremost, thank you so much for taking my question. I've been a follower for the past 10 years, and I've learned so much from you, and I just wanted to extend my sincerest gratitude. So thank you so much. And the reason why I interrupted you right at that moment is because I think it's a great lead-in for my question. Because one of the things that I've been struggling with as I've been on this journey with you for the past 10 years, listening to your podcast, is determining how much of this is deliberate versus how much of this is actually sheer incompetence. When you take into consideration the amount of corruption that has taken place from 2020 with COVID, with Mark Zuckerberg coming out and admitting the suppression of information, the recalculation of inflation, the redefining economic terms, like how much of this is actually deliberate versus how much is actually pure incompetence? Because I think sometimes, like when I'm listening to you, I say to myself, how can they be so stupid?
Yeah,
Like
I ask myself that often, and I don't really know. And I say this too a lot about the Fed. Are they lying or are they really this dumb? Right? I mean, which is it? And again, and it's not, when I talk about dumb, it's not like, I mean, obviously these guys are intelligent. I mean, if you gave them an IQ test, they're probably pretty smart. I mean, a lot of these guys probably have a higher IQ than I do. So they're not dumb in the sense that they lack intelligence, but they believe a lot of things that are dumb. Now, either they believe these dumb things despite the fact that they're smart, or they're just lying, right? And they're just because they know how bad the problem is. And, like the Jack Nicholson movie, they know we can't handle the truth. So they're not telling us the truth. It's easier to spoon feed us a lie, right, than to tell us the truth. So I don't know. I mean, you'd have to be able to have a conversation. I had a conversation with Ben Bernanke one time at a cocktail party because we were both at an event. And I was like, all right, let me just have like a candid conversation with this guy. And I know he's supposed to be super smart. Like he went to all these schools that I didn't even get accepted to, and he probably had much better, SATs than I did. So he's a smart guy. But when I talked to him, I didn't get the impression that he had any idea that he was responsible for a lot of the problem, or that the Fed was responsible. I mean, I came away from that conversation thinking, yeah, no, the guy actually believes this nonsense. I mean, and maybe he was just a good liar to me, but based on the conversation, I mean, he was that incompetent. He wasn't, he wasn't, deliberately doing the wrong thing. He thought he was doing the right thing, and just had no clue. That was my take from my discussion with him. But like Alan Greenspan, I mean, I've never had a discussion with Alan Greenspan other than the fact that I did exchange correspondences with him when I was just out of college in the early 1980s, like 1987. I wrote a couple of letters and he answered me. But I always thought that Greenspan knew that what he was doing was wrong, and he did it anyway, because I thought Greenspan, you know, really understood economics, probably the most of any Fed chairman, including Volcker, who was before him. I think he had a better understanding of economics and money and gold. Yet, despite all that, he basically was the architect of the housing bubble, and he was more responsible for the financial crisis than any one individual. So, but I think he knew better, and he did it anyway. But I don't think most of the guys that have followed him that know what Greenspan knew. I think they're just, a lot of them are just incompetent. But again, some of them, their goal is just to keep the whole thing from imploding. That's their short-term goal. How do we stop this house of cards from imploding? And doing the right thing is not how to stop it. That accelerates it. And so they're just trying to keep it going for as long as they can. That's their goal.
Okay, Il Ainai, are you there? You're up next.
Anybody?
Hey, Peter, I had a question for you about in gold. Yeah, this is a line I hear. I tend to follow the COTs every once in a while, and for gold, the thing is starting to get pretty significant. I think it's about 300,000 contracts long between managed money and other reportables. In the gold market, who are the participants, and especially around when they start cutting rates, and do you think that positioning here is appropriate, and who's right? Is it the physical side, or is it the funds and the prop shops?
Well, I mean, I think whoever's buying gold is right, because I think that the only real direction gold has is up. And a lot of people thought, well, didn't the markets price in the rate cut? I mean, why should gold go up? Because we all knew that the rate cuts were coming. And that's true. We knew the rate cuts were coming, but we also know that more rate cuts are coming too. I mean, they're all in the pipeline. But not only are more rate cuts coming, but inflation is going to rise. And so that means that real interest rates are going to fall even more than the nominal decline. And all of that is super bullish for gold. So, I mean, I think this is the end game. I don't know how far into the end game we are, but this is the unraveling of this dollar system. And it's again, when they write the history book about the dollar and its demise, one of the things that will will be hard for people to believe was that, we accelerated it ourselves with the sanctions, the Biden sanctions against Russia, accelerated the process that, it should have already been happening anyway, but it just was shows you think, did these guys really get it? Well, if they got it, they wouldn't have done this, right? If the Biden administration or anybody advising him really understood the degree to which we depend on the dollar's reserve status, they never would have done what they did to Putin, because they just shined a big light on the risks that a country assumes by holding dollars, and how they put themselves in a vulnerable position where they can be punished if they do something that the United States doesn't like. And once they did that, they really created yet another incentive to divest of dollars, when that's the worst thing that could possibly happen if your goal is to keep the bubble going for as long as possible and delay the day of reckoning. You got to keep this dollar system going as long as possible. And you don't do that by punishing the people who are cooperating with you and who are holding on to dollars, right? That's the last thing you want to do. And when we did it, and it either shows you how arrogant we are, or how ignorant we are, or a combination of both, that we did that.
Okay, Highway Blues.
Yeah, can you guys hear me?
Yeah, who's up?
Hey,
Yep.
Peter. My name is Damien. I'm in the trucking industry. I own my own truck. Being a fan of yours and the Austrians for quite some time, and man, it's been a very painful experience to get to that knowledge. And my question is going to be in a framework of private property, price theory, and Austrian business cycle. Um, in relationship to I don't know if just in case, the 1980 Motor Carrier Act, when they established that the freight brokers, are gonna be put in place to negotiate prices with shippers and manufacturers and cut out the carriers. And when I compare it to those principles, it's clearly that is fascism, that is corporatism. And my question is, if you think is those people are possessed by the Keynesian, that the government is giving money, more special interest to university to teach Keynesian, and they are possessed ideologically, or it's just pure Machiavellism?
Well, I mean, everybody has pretty much been a Keynesian, ever since, I think, the Great Depression turned people into Keynesians. With the New Deal. But Keynesian economics, which is all a bunch of nonsense, but it's exactly what politicians want, because it creates government as the solution, because it focuses on demand and spending. And it says, the way you help an economy is to stimulate demand, which is nonsense. But the government likes to stimulate demand, because that's how they also get votes. They stimulate votes by giving people money to spend, right? And so Keynesian economics has been a great tool for politicians to get reelected, but it hasn't been a great tool for the country, because it's caused a lot of problems. But academics, that's what they believe. That's what all the people who teach economics, they teach this nonsense. They believe this nonsense. And if you don't believe this nonsense, you're not going to get hired as a professor at a university. And if you don't believe this nonsense, you're not going to be appointed to be an economist at the government, at the Federal Reserve, or at the White House. So it's like everybody who reaches a high level in the profession of economics, right? Who are the top economists? They're the ones who are professors at the top universities. They are working for government. They get hired as an economist for the major banks, the Goldman Sachs, the Morgan Stanleys. They only hire the complete idiots, right? You have to believe this nonsense to get one of these jobs. So there are actually good economists, but they don't rise high in the profession because they're not the ones that are going to get appointed, because they're not even there to give good advice. They're there to justify the bad policies that the governments are pursuing. And of course, Wall Street loves all this money printing and inflation because it enriches them. It enriches Wall Street while it impoverishes Main Street. So yes, all these banks have all these Keynesian economists that they hire to keep this thing going. It's all PR for what makes them money.
Wow, so they never stuck in the question about human liberty and private property, for the price theory, teaching that to get the best optimal price, since price is subjective, the best optimal the best thing is the owners of the property negotiating the price, and you don't got a third party like a broker. I can understand brokers connecting people and getting a percentage, no problem with that. But when you put a middleman that is completely taking over my property, my property rights, and it's not taking account my P&L statements. So they negotiate for me without even caring shit about my expenses. So yeah, I don't. When I see that, I see trucking as the stupidest business ever, and it seems like they're just taking it, doing it on purpose. So just to create to bring more cheap labor. So that's my
Well,
thing.
the best thing that we can have is a free market, where you don't have the government imposing all sorts of rules and regulations that undermine the free market, that undermine choice, that undermine competitiveness. Now, that doesn't mean that there's no rule of law. Yes, there's a rule of law, and there are rules that we abide by. But most of the regulations are the government micromanaging the
Exactly.
businesses and trying to eliminate choices by saying, "Oh, the consumer is too dumb to make a decision on his own, and so we need to protect the consumer from his own stupidity by requiring all this stuff. Workers are too dumb to not get exploited, and so we need to have all these rules to protect the dumb worker from being exploited and to protect the dumb consumer from being ripped off." But what happens is the rules and regulations that government creates ends up ripping off the workers, ripping off the consumers. And the irony of it is the government thinks that we're all too stupid to to shop around for a good deal on a product or to shop around for a good job. We're all a bunch of idiots that need to be protected by the government, but we're all smart enough to vote, right? Yeah, we can make it. We can decide who we should vote for. We're smart enough to pick the president, but we're not smart enough to pick out our own deodorant. Like it's complete. It's backwards. People are smart enough to shop. They're smart enough to find a good job, but most of them aren't smart enough to vote. That's the reality. And we shouldn't have everybody voting. That's the problem. That is really at the root of it. Why do we have so many bad laws and programs and regulations? Because we're putting everything to a popular vote. And yeah, the average American doesn't get this, right? They don't understand the economics, but they understand their own self-interest. That's why I trust Americans to shop around for a good deal and to pick the best job they can find. But I don't trust them to vote for a politician who's promising them something for nothing, because they don't understand how much that something for nothing really costs.
Okay,
Who's up next?
Greg Falcheglia.
Yes. Hi, Peter.
I may go to 7 because things seem to be running smoothly now. So maybe I'll stay till 7. Who's up?
Hi, Peter. It's Greg Ficelia.
Hey, Greg.
Hello. We have some money in the separately managed account, and I'm just just would love to hear from you how, and it's improved recently. It's gone up in value recently. So in spite of all, the money creation from all these central banks, how's the and I like the picks you have in there, the oil and gas, the majors for gold. How should we expect the SMA to perform with all this money creation that's going on?
Well, my expectation is that they perform very well because the stocks in the SMA were selected to do well with inflation, to do even better with stagflation. So, because inflation, if you understand the dynamic of inflation, there's always a winner and there's a loser. So, who loses to inflation? People who have savings, people who have cash, people who are owed money. They've loaned money out, and they expect to get paid back. Creditors are big losers to inflation. Who wins? Asset people who own assets, people who have debt. Now, who's the biggest debtor of them all? The U.S. government. So the U.S. government wins by creating inflation because it wipes out the value of its debts. And so we want a portfolio that is aligned to be a winner from inflation. So we have to own real assets. And we have to own businesses that can sell products and services that customers will buy during hard times.
Right.
Because inflation means hard times. And so I think the portfolios are going to do really well. In fact, the best scenario for my portfolios is a major dollar decline.
Right.
As long as that happens, it doesn't matter what happens to the U.S. stock market. My stuff's going way up. But if the U.S. stock market goes up as the U.S. dollar goes down, that is the best scenario for my portfolio. Because if the U.S. stock market goes up, foreign stock markets are going to go up more while the dollar is falling, and you're going to get the tailwind of a weak dollar. If the U.S. stock market crashes while the dollar is crashing, that could cause foreign stocks to go down, but only in terms of their local currencies. I think in terms of the dollar, they're going to go up. So, so my strategy should do better in a bull market, but they could do on a relative basis even better in a bear market. But the key is a weak dollar and inflation. And of course, if the gold price keeps going up, eventually the gold stocks are going to catch up. So gold stocks, I think, have a pent up, optionality in them.
Right.
In that when you're buying a gold stock today, you're really getting a deal. And the potential is for the market to wake up and reprice these stocks. And when that happens, they're going to be a lot higher price very quickly.
Okay.
And so the key is to own them. And I think that performance is baked in. Like if you look at my value SMA, maybe it's about 15 to 20% gold stocks, but the benchmark is 0% gold stocks. And so when those gold stocks triple, quadruple one year or more, my competitors don't have any. Right. And so it's, I just blow them out of the water. Like you can look at my bond fund, which is, it's a 4-star fund. I have a bond fund that was 1 star about a year and a half ago. Now it's 4 stars, but it's 5 stars over just the last 1, 3, and 5 years, or 3 and 5 years. It's gave back some ground this year. But why did I go from last place to first place? It was because I had a shorter maturity of my bonds because I knew the bond bubble would pop eventually, and it finally did. But there's still a lot of air that's going to come out of that bond bubble. And I also think that my currencies, we have a lot of emerging market currencies in there that are going to do really well. And so I think that I think all of my funds are going to be number one in their categories especially at the end of next year. So at the end of 2025, my expectation, so this is my belief, I can't promise anything, but this is what I think. I think all my strategies will be number one, like 5-star, maybe the top over a 10-year period, a 1-year period, a 3-year period, a 5-year period. I think I'm going to kill it because the worst years that we had were 2014 and 2015. 2014 is about to drop off the 10-year track record at the end of this year, and 2015 will drop off next year. 2016 was the best year we've had. Now, I think next year could be even better than 2016, but 2016 was our best year because I didn't start my funds until about 2011, 2012. My best returns as a broker were from 2001 to 2008, right before to the financial crisis. Not even counting the subprime short because I didn't have that many clients that actually did that short. But we had a great run after the NASDAQ bubble popped up until the financial crisis. But I didn't have any mutual funds. I didn't have any track record because I was just a stockbroker. But if you recall what happened from 2001 to 2008, oil went from under 20 to 150. I was loaded up with oil stocks. I mean, loaded up. I had stocks in Russia, in Kazakhstan. I mean, I had all these stocks that went way, way up. Gold went from under 400 to 1,000. I was loaded up with gold stocks. The dollar index went from 120 down to 70. It got crushed. I had all these emerging market stocks. I had all these foreign stocks. So we just killed it during that time period. We were just making money hand over fist. I just don't have a track record to prove it because I didn't have any managed accounts. By the time I started my mutual funds and my managed account program, it was 2011, 2012. That was like the peak of my, that. So then we had a bad period. But right now, and just recently, I'm positioned like my value fund is number one. You go on Morningstar. Over the last 5 years, we're number one out of like 350 funds. We're number one. And so, but we were like the lowest. We were at a year or two ago, we were at the bottom. So but it's just turning. So I'm really, I think, in a great position to just crush it going forward, and then even looking backward now from where we are, because I think I own all the right assets. I just owned them way too early, which you only know with the benefit of hindsight. But I think that the people that are listening to this now, to the extent that they can, I mean, my mutual funds are available. Anybody can buy them, no load, at discount brokerage firms. You can buy my value fund, my dividend payer fund, my emerging market fund, my gold fund. There's a prospectus you can get online. You can read it. Get familiar with the risks, all the costs, and everything. But they should all be bought, and the minimums I think are just $2,500. So just about anybody can scrape that together.
All right, B. Nicky,
anybody else?
You're up.
I know we've got about 12 people still looking to ask questions.
Or Mila Master, how about you?
Ajinka, is that you? No, now you're muted.
Hello, can you hear me?
Yes, I
Hello?
can.
Hi.
Yep.
Firstly, I just wanted to say that I really love your podcast, and I want to thank you for all the valuable lessons that you've taught me. Now, my question is, buying gold mining stocks as leverage plays on the price of gold relies on precisely the price of gold increasing more rapidly than the fixed costs of those companies. However, some of these fixed costs are also likely to increase with inflation. So how can we be sure that the price of gold will increase faster than the fixed costs of gold mining companies?
Well, you can't be sure, right? I mean, there's risk, right? That may not happen. But I think that as the world, as investors come to terms with the reality that they've been oblivious to and lose confidence in the Fed and other central banks, you're going to see a rush into gold, right? We haven't seen that yet because, as I said, the public is still selling. We've had net outflows out of ETFs this year. Institutions are not buying. The pension funds, the endowments, the hedge funds, sovereign wealth funds. You don't have much interest, investor interest in gold yet. But when that happens, and it's long overdue, and now you have a lot of money that's trying to get into a small, pool. Gold is only the total market cap of gold is about 17 trillion. I mean, you've got U.S. companies that are worth 1 or 2 trillion, just individual companies. So, you take the Magnificent Seven stocks, all of them together could have about the same value as all the gold in the world, just those 7 stocks, right? So, if you get a big influx into gold, physical gold, the price has to go way up. Even more so, you know, all the gold mining stocks in the world, you know, the combined market cap isn't even close to $1 trillion. I mean, it's, I forget what it is, a couple of 100 billion, whatever it is. I mean, all of them, all the publicly traded stocks all over the world don't even get you to one Mag 7 stock. In fact, they don't even get you to a decent S&P 500 stock. And so if you get, 2, 3, 4, 5% of investable money looking to get into that sector, which they could, the prices have to go up dramatically, you know. So I just think there's massive upside potential in both the metal and even more so in the mining companies. Because when you buy a mining company, you own their gold. Like, people make fun of me because I say, look, most of my money isn't in physical gold. Yeah, I've got physical gold, but I have more gold stocks. But I regard my ownership of gold stocks as owning gold, because I basically have an option on it, because all those gold companies have gold in the ground that they haven't mined yet. And so I own some of that gold because I own shares of the companies that own that gold. And it's not being mined this year to generate earnings, but it's there to be mined in the future. And so I own that gold. It just hasn't been dug up yet, but it's there, you know. And I'm buying the gold in the ground for a lot cheaper than I pay to buy the gold out of the ground in a bar, right? I'm getting a much better deal on that gold because it's still in the ground. It's very cheap. So it's just a roundabout way of owning gold. And I do think eventually, I mean, you might see some big governments just trying to, buy these gold companies so they can get the gold as soon as it comes out of the ground, not have to compete. Just say, hey, I'm going to, what if the Chinese just decide to buy up some big gold companies just so they get all the gold, right? It's like that gold is now, no one else can buy it because they've bought the company. That's what sovereign wealth funds should be doing. They should be buying up gold companies so that they own that pipeline. They could just take the gold right out of the ground and put it in their vault and not have to buy it in the market because they own it.
B. Nikki,
Hey,
you're up.
thank you. Thanks for taking my call, Peter. Quick question for you. I'm a new trader. I have physical gold, I have gold stocks, and then I have mining stocks, GDXJ, Arizona Metals. When recession does happen, when the big crash does come, do you expect gold and these mining stocks to drop as well and then take off? And is that a good point to buy?
No, I mean, I don't expect the mining stocks to drop substantially. Otherwise, I would sell them, I guess, and try to buy them back cheaper. I think that there will be more volatility in the stocks than in the metal. I think there's very little risk in gold going down considerably. I don't even think you'll see a 10% correction. I don't even think you'll see a 5% correction, not for a while, in the price of gold. But you can easily see that in a week in mining stocks. I mean, we just had, it was just a few weeks ago that the GDXJ dropped like 15%. And then it rallied in 1 week. It made back the whole thing. But it had a big drop on nothing, on not even $100 drop in the price of gold did that. But I bought earlier this year in February, March, when they were downgrading Barrick and they were downgrading Newmont, and they had bad earnings. I bought for myself. I bought more Newmont. I talked about it on my podcast. I bought more Barrick. I bought more Pan American Silver when it got hit. I bought more. Franco-Nevada, it had some problems. It got hit. I bought a bunch more Franco-Nevada. I bought some names that I didn't even own. We had a big position in B2 Gold in our fund. I didn't own any myself. It went down. I bought a bunch of B2 Gold because I didn't own it. There are a lot. I added a lot to my own positions earlier in the year when gold was still around 2,000, and these gold stocks were making 52-week lows, right? So at that point, but I haven't added any gold positions to my own portfolio in months, right? After that big drop, February, March, April. Now I bought. I added considerably to already large positions that I already had. But I haven't bought any because I'm pretty much I'm invested, and I don't need to buy more. I got more gold stocks than my grandchildren will be able to spend. But I had to buy them when they were just throwing them away. But I still think they're cheap. And the only reason I'm not buying more now is because I've got so much, and so I started to buy some non-gold stocks after the gold stocks had a big rise. And when the gold stocks tend to be higher, I tend to invest in non-gold stocks until they get clobbered, and then but the fact that it's taking so long, I have a much bigger position in gold stocks now than I did in 2020, way bigger than I had in 2008. So if we finally get the big move that I've been waiting for, which we haven't had, I will make a lot more money now than I would have made had it happened earlier, because I have much bigger positions now because the market has given me the opportunity to buy. I never would have thought, a few years ago, like even back in 2020, that I could have bought Newmont and Barrick and Pan American Silver and Frank for the prices I was able to buy them at, this year. And I bought more. I added to my IM Gold. I added to Kinross. I mean, I bought stocks earlier this year that a few years ago I never thought I would have had the opportunity to buy them again that cheap. So I took advantage of it. I bought them, and I was telling my followers, buy them. But I haven't bought any gold stocks in months because I already bought them when they were cheaper. But they're still cheap. If I didn't own them, I'd buy them. But I already do. But people should buy. Again, everybody has a different risk tolerance. I mean, they're not without risk. But if you're gonna take risk, that's why I tell these crypto guys, if you're gonna take the risk of Bitcoin or Ethereum, you might as well just buy gold mining stocks because you got way more upside and less downside. Anybody else?
Yeah, I got a question.
I think.
Go ahead. Yeah. Hey, Peter, I've been wanting to ask you this question for a while.
One of the only reasons too that I can even talk about stocks and stuff now is because I'm no longer a stockbroker. This is my first year. I let all my stockbrokers licenses lapse. FINRA is this entity that was created, and the government requires that all stockbrokers be a member of FINRA. And then once you're a member of FINRA, they basically take away all your freedom of speech, and they dictate what you can say. And so I'm now finally, after like over 30 years, I was a stockbroker, and I had to put up with that crap. But now I'm not, So now I'm FINRA free, although I'm still a little bit of FINRA because I have one license still from my RIA. But my business is I'm a registered investment advisor, and so I'm mainly regulated by the SEC. But I wish I wasn't regulated by them either. I mean, I would like to abolish. Somebody called up earlier, was asked Trump or getting rid of regulations. Trump should get rid of the SEC, not just get rid of Gary Gensler. Get rid of the entire SEC. We don't need it. We should just abolish it, and we should abolish FINRA. Not only would that save a bunch of money because we could fire all those bureaucrats and let them get real jobs, but it would help the country. It would help the capital markets, right? Things would be better, right? Investors would be better protected and better served without the government, looking over their shoulders.
Yeah. Hey, Peter.
Who's up?
Can you hear me? Can you hear me?
Anybody?
Can you hear me?
I wonder if
Yeah, I can hear you,
I got a lightning
Steven.
storm over here. I'm looking out my window. I'm on a condo at the beach here. I
Okay.
guess this wasn't the greatest internet, but
I have a
see a lot
question.
of lightning outside.
I have a question for you,
Who's
Peter.
up?
Peter, can you hear
Yeah, I
Steven?
can.
I just heard some noise, so I know that people are moving around.
Okay. Do you hear me?
Hello?
Hello?
Can you hear me?
I can.
I don't know which
Can
one
you
of us is you're here.
I think Paul Addison. I think that's you that he's hearing.
All right.
Excuse me?
Can you hear me, Peter? You okay?
No, I hear you. I hear you.
All right, all right. Yeah, so my question's about gold stocks as well. So I'm pretty heavily invested on the junior end, and not in the GDXJ. Like I'm stock picking. You know, I probably got a basket of 2025. What I feel are pretty high quality junior mining stocks. My question is, do you have a sell strategy? Like I've heard you say that you think for the majors, you know, these things could go 10, 20x, you know, so I guess first part of the question is like, do you see that happening over the course of like, I don't know, like a Bitcoin time frame as in like, you know, 10 plus years? Or do you think this is going to be like a, you know, 2-3 year huge burst and then, you know, or do you think this is going to be some extended period? And like, do you have and when it comes to selling, like, do you have a specific number in mind? Like, okay, if these things go up 20x, I'm out, you know, or is there going to be a function of
Yeah, no,
like how what's going on in the
there's too
macro
many.
environment? Like, as long as we keep doing the wrong thing, you're holding these things.
Yeah, there's a lot of unknowns. And so it's like I don't know what I'm going to do because I don't know what's going to happen and the order is going to happen. I mean, let's say we have hyperinflation, right? Let's say you have a portfolio of stocks and you have $1 million invested and it goes up 10x and it's 10 million. And you're like, oh, let me cash out. I got $10 million. And so you sell and then you have $10 million and then we have hyperinflation, like almost like, you know, like right away. And a pack of chewing gum is $1 million, right? Now, does it matter that you have 10 packs of chewing gum as opposed to just one pack of chewing gum? No, right? All your profits are now meaningless because, you know, you got wiped out because 10 million and 1 million are basically the same thing, just a few extra pieces of gum. That's an extreme. But the point I'm making, I don't know when I don't know what's happening. I have to see, you know, what we're doing to give me confidence to get back into a fiat currency and out of something real, out of gold or out of stocks, whatever we have. But along the way, we will rebalance. I mean, that's what we do now. I mean, you could look at some of the stocks that we sold in our funds, you know, earlier in the year, and how much those stocks have gone down relative to the ones that we bought that have gone up. I mean, so we're still fine tuning in the portfolio. So, okay, I don't want to go to cash, but I've recognized here's a stock that I can sell and I can buy this different stock. So we're going to do stuff like that within the portfolio. And the same thing might happen within the mining portfolio. We might see, oh, let's sell this mining stock because it's gone up a lot. It's now expensive relative to this other mining stock that we could buy. So we're still going to be managing the portfolio and continuing the strategy. But where I would want to change the strategy and say, hey, let's not even own these gold mining stocks anymore. Let's get back into the dollar, right? I said I would love to be able to do that. I just have to see, like, I would hope that if I was doing this in the 1970s and I had a portfolio of gold stocks and foreign stocks and oil stocks throughout the 70s, that at some point in the early 80s, given Volcker and what he did, and given Ronald Reagan and given the reforms that we made, even though they weren't perfect, but we significantly reformed the progressive tax system. We really rang inflation out. Volcker did a lot of correct things. Maybe I would have sold gold at around 800, 700, 600 in the early 1980s and got into the Dow, got into, U.S. stocks in the early 80s and stayed in them, for the 80s and most of the 90s. But by the time I got into this industry, it was the 90s, really, the mid 90s. And, I was in some U.S. stocks early on in my career, and I was in some foreign stocks. I didn't really start getting out of U.S. stocks until the latter 90s, like 96, 97, when I saw the tech bubble. And then I started buying foreign stocks because I thought the dollar was going to tank when the tech bubble broke. And I was right about that. And I made a lot of money on these foreign stocks and these gold stocks. But then I thought the dollar would tank more after the 2008 financial crisis. That was the only thing that surprised me, because then we had the financial crisis and the dollar went down briefly. Gold made a new high, but then, everything reversed, and I didn't catch that, and I stayed with the foreign stocks and the gold stocks and all that, throughout that huge bull market in U.S. stocks, because I kept expecting, another shoe to drop, because I knew how much worse. I knew that everything the Fed did to solve the problem made the problems much worse. It just, took a long time for the damage to, to come to the surface. And I think, that's kind of where we are now. We're, on the cusp of that. And that's why, my strategies have done so much better over the last, few years than they were back then. But I think the real performance of my strategy is coming, as this thing finally plays out and we have the end game that I've known, from before the bursting of the tech bubble, right? I've known for over 20 years where we were ultimately headed. I just didn't know it would take us this long to get there, but I know exactly how this movie ends.
Bob Jocks, you're up.
Yeah, Peter, what are some of your thoughts on the exploration companies and those exploring to get mining? Because there's a difference between maybe having, buying 1 ounce of gold for $2,600 or getting 200,000 shares of somebody that's out there exploring something you look at, or even Adrian Day looks at as far as getting into some of these companies.
Yeah, and again, I would, if you're talking about buying the exploration companies, you don't want to just buy one of them. You want to buy a fund, because they may find nothing. Some of these stocks will go to zero, although they could run up a lot before they go to zero. Who the hell knows? But you want to be diversified, and you want to hire a guy like Adrian Day to manage the portfolio, because he knows a lot more than you will about the sector and about geology and all that stuff. I mean, he's been doing this for like 40 years, so that's why I hired him to run my gold fund. I mean, I don't really understand a lot of what goes into the mining operations. I just think the price of gold is going to go up because of my understanding of economics. But I'm not, I've never worked in a gold mine. I don't really know, I don't know enough about it. He visits the sites. He meets the management teams. I mean, I don't do that. I don't have time to do that. But he's been doing that for a long time. But yeah, I mean, gold, under normal circumstances, you're not going to get rich owning gold. You're just going to avoid going broke. But I actually think that gold is so underpriced right now that you can make some decent money. It's not just about preserving what you got. I think you're able to buy gold very cheap right now, so you can actually make money. But you can make a lot more money in the mining stocks. You can also lose a lot of money in the mining stocks. So that's why it's a different animal. But I just think that, if gold goes up 10x, if gold goes from 2,600 to 26,000, which it could do, I think that you'll make a lot more than 10x in mining stocks. You could make 50x, you could make 100x, At some point, the market is going to stop worrying about gold going down and realize how much it's gone up.
That's John, you're up.
Yeah, thank you, Paul. Thank you, Peter.
Hello?
Can you hear me?
Are you able to hear me? Hopefully you can. Paul, can you hear me?
Yeah, I can hear you. How about I'll move to somebody else and then hop back
Peter,
on.
can you hear me? Okay.
Hello.
All right, let's move over to Alex Humphrey.
Peter, thank you for taking me up
Yeah.
onto the spaces. Can you hear me?
Yeah, I just realized it's 7:00, so let's make this the last call, and then I'll wish everybody a great weekend. And don't forget to listen to my podcast next week. If you're not currently listening to the Peter Schiff Show podcast, make sure and do that. Subscribe to my YouTube channel. And I do the podcast live on YouTube, so you can see and hear what I've got to say. And if you're in this group and you don't follow me on X, make sure and follow me. I know there may be some people that are in this spaces that are new and are not a regular follower of mine. So make sure and follow me, and let your friends know to follow me. Because again, I'm like the Pied Piper of economic reality, and I just I'm out there telling the truth in a world where it's mostly a bunch of lies. And so the more people that know that I'm here and listen, I think the better off we'll all be. But go ahead with your last comment or question, Alex.
Awesome. Thanks, Peter. This is actually my first time tuning into your spaces here, and just wanted to get your thoughts. I see you put out a tweet yesterday regarding Trump's credit card cap at 10% and how it would cause the industry to come crashing down. Wanted to know what your thoughts would be, because we're seeing MasterCard posting about $7 billion in revenue, up 11% on the year. Visa at $9 billion, up 9% on the year. What are some of the policy actions that you would like to see taken to control the credit card industry and put people in better financial position? Thank you.
Well, I wouldn't want to control the credit card industry at all. But I think one of the reasons that the credit card industry is able to extend so much credit is because the Fed has interest rates artificially low. So I think that if we had a free market, that interest rates would be a lot higher and there would be a lot less consumer credit available. Also, I think part of the problem is that all these banks have got government guarantees. And so because they have government guarantees, they are able to engage in much riskier behavior than a free market would let them get away with. So I think if we had a free market in banking and a free market setting interest rates, that there'd be a lot less credit card debt out there. I mean, it just wouldn't be there. The credit wouldn't be there. Savings should go to investment. So, and I think that that's where the savings would be allocated if the government wasn't involved. Businesses would be taking out loans to invest in plant and equipment. People would not be taking out loans to buy, consumer goods. Consumer credit is damaging to the economy, and I think that a free market would limit it. But the government subsidizes it, and so that's why we have a lot more of it. But if the only thing you do is just go to the credit card companies and say the most you can charge is 10% interest, then what has to happen is they have to dramatically increase their lending standards because they have to greatly diminish their losses for people who don't pay. Because right now they give a lot of people credit cards and a lot of the people end up not paying. And so they lose money. I mean, if I loan somebody a bunch of money to buy a bunch of goods and they just go bankrupt or whatever, it's 100% loss. I've lost all of that money that I've loaned out. I didn't just not get the interest, I lost all of the principal. And so the credit card companies, the way they do that is they charge a high enough interest so that they make enough money from the people who are paying to cover what they lose on the people who don't. But if the government says, well, 10% is the most you can charge, then they're not going to be able to lose as much money because they're not going to make as much on the people who are paying. So how do they, get the business to work when the most they can charge is 10%? They have to dramatically limit the number of defaults. And how do they do that? Well, they have to eliminate a lot of credit cards. They have to make it much harder to get a credit card. Now, in the scheme of things, I don't think that would be a bad thing. Personally, I think that people shouldn't be doing that. But that it's like I'm not somebody who believes that two wrongs make a right. So I don't think the right thing is to have price controls on what credit cards can charge. That's the solution to the problem of too many people using credit cards. But the way Trump is, portraying it, it's like, hey, I know your credit card rates are high. Elect me, and I'll put on price controls. When he's criticized Kamala Harris for advocating controls on groceries, you can't then advertise price controls on interest rates if you're also saying that she's wrong to have price controls on groceries, right? I mean, they're all price controls. But these solutions are not going to solve the problems. They're not going to make it easier for people to get a credit card and buy things they can't afford. They're going to make it more difficult. And again, that may be a good outcome from a wrong decision. And just because it may result in fewer people having credit cards, and that might be good. That's not what he's acting like he's going to deliver, right? What people think is, oh, I'm just going to be able to borrow as much money as I'm borrowing now. I'm just not going to have to pay 20% interest. I'm going to be able to pay 10% interest. No, it's not going to work out that way. You're not going to be able to borrow the money at all. So you're going to have to do without that money, and you're going to have to do without whatever you would have bought had you had that credit, because you're not going to have that credit because it won't be available at 10%. It was available at 20%. It won't be available at 10%. I mean, that's the same thing with all price controls. Oh, the government's going to control the price, so they're not going to let the price of strawberries go up. Okay, so now the price of strawberries is fixed at a low price. The problem is there's no strawberries anymore. So yes, you're not going to have to pay a high price for strawberries because you're not going to get any strawberries, right? That's not what people thought. They thought, oh, I'm going to be able to buy them cheap. No, you're not going to be able to buy them at all. Same thing happens with minimum wage. If the government puts a minimum wage of $10 an hour, and you're only worth $7 an hour because that's the productivity that you're able to deliver to an employer, it doesn't necessarily mean, oh, I'm going to get paid $10 an hour for my $7 worth of value. No, you're going to get paid nothing for your $7 worth of value because nobody is going to hire you and pay you $10 to lose $3 an hour. So you're unemployed, right? That's always what happens. There's always an unintended consequence of all these government programs. The problem is most people aren't educated enough to understand that. They don't know about all those unintended, unseen consequences. All they know is, oh, I'm going to get cheaper strawberries. I'm going to get more money from my job. They don't realize that there's going to be no strawberries and there's going to be no job, right? That's why we don't want all these people voting, right? That's why the founding fathers created America as a republic, and why they didn't expect everybody to vote. People talk about, oh, I have a right to vote. The voting is not anywhere in the Constitution until you get to the amendments, the 19th Amendment, giving women the right to vote, or giving 18-year-olds the right to vote. But the body of the Constitution, the Bill of Rights, doesn't mention voting. The Declaration of Independence doesn't mention voting. Voting was always a privilege when this country was started. It wasn't expected that everybody would vote. And for good reason. They didn't want everybody voting. They didn't want democracy. They knew. I mean, unlike our current batch of leaders, the leaders that we had in 1789 were learned men who had studied the history of the failed democracies of going back to ancient Greece, and they knew that it didn't work. They didn't want a monarchy. They wanted a republic, but they didn't want a democracy. In fact, if it was a choice between monarchy and democracy, they would have chosen monarchy for sure over democracy. But we went with republic, but the idea was to keep democracy in check. And that's what the Constitution was supposed to do. That's what the states were supposed to do. Unfortunately, it's not, those protections over time were whittled away, and now it's kind of run amok, and we're having to deal with the consequences And our founding fathers knew these consequences were coming. I mean, they warned us what would happen to America eventually if we went down the path of democracy. But anyway, on that note, let me just end the spaces. I've been doing this for 3 hours. And so it's, I've got a lot of questions. We still have, about 700 people that are here, although, well, now it's now below 600, but it's probably not the same 600 that started. I don't know how many people stuck it out for the entire 3 hours, but I'm sure there were a lot of people that were coming and going. And we're probably going to post this. I'm sure we did it on YouTube like we did before. And so if you have any friends that you'd like to listen to it because they missed it, they can go to the YouTube channel and they can hear everything that went on these last 3 hours. Anyway, bye everybody and have a great weekend, and we'll be doing this again soon.